Honorable guests, ladies and gentlemen, may I have your attention, please? Before commencing today's proceedings, I would like to make some housekeeping announcements. To ensure the smooth running of today's events, we would like to seek your participation in switching off your mobile communication devices, including your mobile phones, to silent mode. Thank you. Distinguished guests, ladies and gentlemen, Assalamualaikum, Günaydın, and a very good morning to all of you. On behalf of the International Islamic Liquidity Management Corporation, it is an honor to welcome you all to the 4th Islamic Liquidity Management Roundtable. This event is organized by the IILM and supported by Al Baraka Turk Participation Bank. We are also pleased to announce that today's roundtable coincides with the launch of our inaugural Global Islamic Liquidity Management Report, produced in collaboration with the London Stock Exchange Group. Building on insights on this report, our roundtable aims to bring together key players from the Islamic finance industry to discuss on the current state of liquidity management, challenges faced by Islamic financial institutions, and to explore innovative solutions to enhance Sharīʿah-compliant Islamic liquidity management. We look forward to enriching and fruitful exchange of ideas during today's discussion. Ladies and gentlemen, this year also marks a particular significance for the IILM as we proudly celebrate 10 years of our IILM Sukuk program. And to mark this milestone, we would like to share the IILM corporate video offering a glance of our journey to date.
The International Islamic Liquidity Management Corporation, IILM, is an international organization established in 2010 by central banks and a multilateral organization to address liquidity management challenges faced by Islamic financial institutions by developing and offering highly rated Sharia-compliant liquidity instruments. The IILM's diverse range of members paves the way for a collaborative, cross-border approach for Islamic financial institutions in effective liquidity management. It aims to foster regional and international cooperation and build robust liquidity management infrastructure at national, regional, and international levels. Since its landmark inaugural issuance of $490 million 3-month tenor Sukuk in 2013, the IILM has remained the only regular issuer of US dollar short-term Sukuk in the market, and has issued in excess of $75 billion to date. The IILM Sukuk is a highly rated Sharia-compliant money market instrument backed by sovereign-linked and supranational assets. Its issuance program is rated A1 by Standard & Poor's and is distributed and tradable globally via a multi-jurisdictional network of primary dealers. The IILM's governance structure contains key organs designed for effective oversight by its members, which facilitates cooperation towards their shared strategic goals. For policies and all strategic matters, the governing board is the highest decision-making body, and it comprises the governors of central banks and the CEO of its members. To find out more, please visit www.iilm.com.
Ladies and gentlemen, just a quick correction on that video or an addition. In addition to the A1 by S&P, we are also rated F1 by Fitch, just so you know. And instead of 75 billion, I think as of today, we're over 100 billion of issuances since our inception of the program. Ladies and gentlemen, to commence our proceedings, I would like to invite Dr. Omar Hosseini, Chief Executive Officer of the IILM, to the podium to share his welcoming remarks.
Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. والصلاة والسلام على أشرف الأنبياء والمرسلين سيدنا ونبينا محمد وعلى آله وصحبه أجمعين. Your Excellencies, distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. Marhaba, and a very good morning, and a warm welcome to you all here today. It is with immense pleasure, pride, and gratitude that I extend a heartfelt welcome to each and every one of you to today's Islamic Liquidity Management Roundtable, a pivotal gathering of esteemed individuals from various corners of the globe. I'm sure we have the virtual participants as well joining us here today. These are participants who are committed to advancing the principles of Islamic finance and shaping the future of liquidity management within the Sharia framework. Our deepest appreciation goes to Al Baraka Talk Participation Bank for providing its support in making today's event a possibility, and for being a reliable partner for the IILM Sukuk program. For those who may not be aware, Al Baraka Talk is the IILM's only primary dealer from Turkey since our very first Sukuk issuance in August 2013. Distinguished guests, ladies and gentlemen, the dearth of Islamic liquidity management instruments has been a constant challenge despite the industry's growth and maturity in different regions across the globe. However, we have seen in recent years the introduction of new tools to manage liquidity in many markets and the development of liquidity instruments by authorities such as central banks that serve as an integral component in the overall advancement of the Islamic financial industry. In the UK, for instance, I'm sure we're familiar with the alternative liquidity facility, which was introduced in 2021. And just recently, most of us, I'm sure you're also familiar with Bank Indonesia, which launched the SVBI and the SOFB. These are instruments that are meant to strengthen its currency stability and provide deeper support for its money market development. As we navigate the complexities of the global economy, the importance of liquidity management cannot be understated. In the Islamic financial system, managing liquidity takes on a distinctive character, guided by the principles of Sharia and the pursuit of economic justice. Our deliberations here today are particularly timely, given the dynamic nature of the financial markets and the evolving global economic landscape. Islamic liquidity management generally not only provides an alternative framework for financial institutions, but a transformative approach in ensuring stability, equity, and ethical considerations in the intricacies of financial transactions. As an organization with a mandate to facilitate effective cross-border liquidity management, the IILM is pushing the envelope further by continuously engaging in meaningful discussions with various stakeholders. Just yesterday, we had a governing board meeting of the IILM in this same hotel, and a number of governors were with us, and we made some policy decisions. And today's event also, the roundtable, it's a testimony to this that reflects, our constant engagement with the market. And after this event, we'll be having a closed-door session, which is a high-level kind of consultative forum to actually speak to our major stakeholders, to get feedback directly from them. So this actually is something we do on a regular basis. Distinguished guests, ladies and gentlemen, the IILM was established by several central banks, as many of you are aware, including the Central Bank of the Republic of Turkey, some 13 years ago, to facilitate more efficient and effective liquidity management solutions for institutions offering Islamic financial services, as well as to facilitate greater investment flows of Sharīʿah-compliant instruments across borders, and to support Islamic banks in times of liquidity crisis. We witnessed the COVID era, and we all saw what happened. And for your information, we increased the program size at the peak of COVID. Because the funding request we received during the COVID era was huge, and we had to increase our program size, and we increased our offering to the market at that time. So as we gather here today, I'm thrilled to share some truly extraordinary achievements that we have reached in the last decade. This year holds particular significance for us as we mark the 10th anniversary since our very first short-term Sukuk issuance in 2013. Over these 10 years, the IILM has come a long way, and we are incredibly proud of all that we have accomplished together. Just earlier this month, we conducted our final auction for the year, and the successful issuance in December has brought the IILM's total Sukuk issuances since inception to over 100 billion US dollars across various tenures of 234 series. Throughout these years, the IILM has never once defaulted on our obligations. The weighted average bid-to-cover ratio exceeding 200% speaks volumes about the strong demand and the critical need for Islamic institutions to have access to high-quality liquid assets, HQLA, a role that the IILM fulfills remarkably well. The true test came during moments of crisis, which I've explained earlier, particularly during the liquidity crunch triggered by events like the COVID-19 pandemic. Even in the face of unprecedented challenges, the IILM Sukuk thrived and helped market participation during a liquid period. As we reflect on these accomplishments, I would like to extend my deepest gratitude to all our shareholders, including the Central Bank of the Republic of Turkey, our primary dealers, including Al Baraka Turk, and our valued investors for making this journey a truly memorable one. We also appreciate our prospective or potential investors that will be buying our Sukuk shortly. Our collective effort to understand, discuss, and shape the future of Islamic liquidity management through the diversity of expertise and experiences present here today is a testament to the global relevance of Islamic finance principles. As we engage in profound discussions, let us remember that our deliberations have the potential to influence not only the Islamic finance landscape, but also the broader global financial system. Our decisions and strategies should not only meet the financial objectives of our respective institutions. Of course, I know it's important, but we should also contribute to the well-being of the society at large. Islamic finance is not just about profit and loss. It is about fostering an economic environment that serves the needs of all members of the society. On the back of the broader economic landscape, we are seeing how geopolitical shifts, environmental challenges, and social transformations all have implications for our financial systems. How can Islamic liquidity management be a force for stability and positive change in this dynamic context? This is a question that demands our collective wisdom and innovative thinking. From its humble beginnings to its present global reach, Islamic finance has demonstrated resilience and adaptability. Today, it is not just a niche market, but an influential player in the global financial arena. Our discussions here today will contribute to this ongoing journey of growth and development. On a global scale, despite dealing with a post-COVID-19 era and the US Federal Reserve's tightening monetary policy, we are seeing a rapid growth of Islamic finance globally, with total assets reaching approximately 4.5 trillion US dollars in 2022, and this is expected to surpass 6 trillion US dollars by 2027. As we celebrate our successes, we must also remember that there is still a lot more to be done. The Islamic finance sector is evolving, and so are the needs of our stakeholders. The IILM is committed to staying at the forefront of these developments, continuously adapting to better serve our industry. As 2023 draws to a close, we saw a number of crises this year that affected the global banking industry and emphasized the importance of proper liquidity management in maintaining stability of the financial system. In the face of uncertainties, market players in the Islamic finance sector will need to continue to explore innovative tools to address the industry's evolving liquidity management needs. I'm proud to say that the IILM has been dedicated to fortifying the underlying ecosystem of Islamic finance by consistently and regularly issuing HQLA Sharīʿah-compliant liquidity instruments to the market. Distinguished guests, ladies and gentlemen, I'm pleased that our fellow speakers for today's roundtable will be able to provide valuable insights and shed better light on the global Islamic liquidity outlook and the state of the secondary market trading of Sukuk. As we always hear that Sukuk is HTM, is hold till maturity, but I think the IILM Sukuk has proven that Sukuk can be tradable, and we do have an active secondary market for Sukuk. Roundtable events such as today's is a unique opportunity for industry professionals, experts, and regulators to come together and share their insights on global Islamic liquidity management. I express my deepest gratitude to each and every one of you for your presence here today. The insights shared and collaborations forged during our time together have the potential to shape the future of Islamic finance and contribute to a more sustainable and inclusive global financial stability. May our discussions be guided by wisdom, our collaborations be marked by sincerity, and our efforts be a source of benefit for the broader community. Thank you, and I wish all of you a productive and enlightening discussion. Subhanakallahumma wa bihamdik, ashhadu an la ilaha illa anta, astaghfiruka wa atubu ilaik. Assalamu alaikum.
Distinguished guests, ladies and gentlemen, thank you, Dr. Omar, for your insightful welcoming remarks. The establishment of the IILM would not have been possible without the commitment and unwavering support of a key figure in the global Islamic finance industry. We recently had the honor of welcoming Dr. Zeti Akhtar Aziz, one of the founding members of the IILM, to our Kuala Lumpur headquarters to share her valuable insights into the establishment of the institution. Dr. Zeti, who was the first lady governor of Bank Negara Malaysia for 16 years, the longest to hold the position, also served as the first chairperson of the IILM governing board and subsequently as chairperson of the board executive committee. Dr. Zeti needs little introduction. Her illustrious career has left an indelible mark across central banking, financial inclusion, and global Islamic finance. Her efforts have not only elevated Malaysia's standing in the global financial arena, but her efforts have also contributed to the international recognition of Islamic finance as a viable and ethical alternative. We are very pleased to share with you Dr. Zeti's special address video on the establishment of the IILM.
Congratulations, actually, to the achievements that IILM has made over the years. And actually, this is the 10th anniversary of its first issuance that IILM made in, I think it was August of 2013. And that was the inaugural issuance. It came from the aspirations for Islamic finance to become a viable and credible component of the international financial system. Now, in order to be a viable and credible component, we needed financial infrastructure to achieve this outcome, this aspiration. When the internationalization of Islamic finance began to gather momentum, we looked at what are the important aspects, and of course liquidity management and the risks to liquidity management was important. At the IFSB, which is the Prudential Standard Setting institution for Islamic finance, there was already a high-level task force that was established initially to look at the management of domestic liquidity in the domestic financial system. But as the internationalization of Islamic finance began to gather momentum, and as the cross-border financial transactions and financial flows began to increase, it was recognized that we needed to look into the aspect of international liquidity management, financial liquidity management. And it was in following the 2009 great financial crisis that took place in the developed world that an initiative was made to look at how was Islamic finance affected, and how could we actually increase our viability and soundness and stability of Islamic finance. And for this, a high-level committee was formed, a task force was formed, and looked at this particular aspect. And the third part of that report that was issued, and I believe it was in 2010, April of 2010, the report was called Islamic Finance and Global Financial Stability. Like, how do we not only achieve financial stability but contribute towards global financial stability? We all know that Islamic finance has built-in financial stability aspects already, but over and above that, we wanted to look at what international financial architecture was important for achieving this. But it was only 3 years later that actually the inaugural issuance took place. And this is because all the elements of the issuance, from being rated and having the primary dealers and the whole operational infrastructure was put in place. But I believe that was done in a very short period of time, and it demonstrated one very important achievement in my view, that very diverse parts of the world, from the Middle East to Africa and to Europe and to Asia and Southeast Asia, that we came together to achieve this. And this usually takes years, and this was achieved within a very short period of time. So I believe everyone recognized the urgency of having this in part of the Islamic international financial architecture, that we came together and rose to the challenge of putting in place an entity that would have the potential to manage these kind of risks and to facilitate financial stability to be achieved within the Islamic financial system. This is usually one of the greatest challenges, actually, to build a consensus and to build a convergence of thinking on various issues. And this occurs not only in the area of finance, but in the area of economic management and so on, that when the world comes together, there's usually very diverse views and diverse thinkings. But in this particular case, for Islamic finance, we were able to have a shared vision and a common goal. And the shared vision is for Islamic finance to transition into becoming a part of the international financial system. And that is a common aspiration and common goal that we all wanted to achieve. And therefore, recognizing this, we came together, and despite having very diverse views and diverse Sharia rulings as well in different jurisdictions, there was a convergence that did occur, and many had a role in facilitating this convergence. And then there were other challenges of being recognized by the international community as well. The proposal that we should establish a corporation, an international corporation that would undertake the responsibility of this issuance of such short-term instruments. And that's where the thinking came about, to facilitate liquidity management for cross-border financial flows, for international portfolios that started to become important during the internationalization of Islamic finance. But equally important was there was cross-border economic activity of investments by corporates in other jurisdictions, and as well as not only investment but trade activity. And all this needed financial support of not only banking and takaful, but also the liquidity management. And therefore the need arose, IILM arose to meeting these requirements. It was a challenge that was very difficult to achieve, because it was not only setting up a corporation, but having the underlying assets against which the issuance would take place, and having the network of primary dealers that would distribute it across different jurisdictions and achieve a pricing that was in accordance with the market. So this was achieved, and so everyone who was involved in this journey to establish IILM and to take it forward can take great pride in having achieved it. The tenure being it was 3 months for a long time, sukuk that was issued, but now you have 1 month, and it goes up to 6 months and 12 months. Yes, so that is also an amazing achievement, because you need this the term structure along the curve of the different tenures as part of the international architecture of efficient liquidity management. In the next 10 years, there should be a transformative adjustment in the scale, meaning that we shouldn't move towards incremental increases. It should be a transformative shift in the magnitude that is being issued. So IILM would need to study on how such a transformative shift in the magnitude of issuance can take place. And this may include capacity building for the domestic infrastructure for liquidity management, because of the expertise that resides in IILM. There are many countries that could benefit from strengthening their domestic money markets. IILM has achieved great advancement beyond many expectations, because it represents a collaboration between very diverse entities from different jurisdictions. And this is something that we see in the world that is plagued by difficulty to find global solutions to some of their problems because of the great diversity. But IILM has demonstrated that it's able to bring together from different continents and not only in terms of issuance of these liquidity instruments that are able to facilitate liquidity management and management of risks to liquidity in the financial system. But it has demonstrated that the world can come together, and is a leading example that it contributes to greater good in terms of global financial stability. And this is very key. Why do we need global financial stability? So that the financial systems can function and facilitate the greater objective of economic and development and economic prosperity that is shared around the world. And so we have to think beyond our immediate mandate and what we can contribute towards. And I believe that probably the greatest pride that we can walk away with is that we had this collaboration despite great differences. And believe me, at the beginning there were heated discussions because of these great differences, and it was amazing that we could actually come together and realize an outcome that contributes to the world.
Distinguished guests, ladies and gentlemen, we would now like to invite Dr. Omar Hosseini, the CEO of the IILM, to launch the inaugural Global Islamic Liquidity Management Report. Dr. Omar.
Assalamu alaikum warahmatullahi wabarakatuh. Distinguished guests, ladies and gentlemen, I'm pleased to share that the IILM, together with the London Stock Exchange Group, LSEG, had worked hard for the past 1 year to produce a report that will provide the Islamic finance industry with an authoritative report on the global Islamic liquidity management landscape. May I present to you the Global Islamic Liquidity Management Report, building a robust and resilient ecosystem, which will be available for public download. The report represents the IILM's sustained commitment and belief towards serving the Islamic finance industry in addressing its liquidity needs, and covers comprehensive perspectives from various key stakeholders. In the report, you will find exclusive interviews with Islamic finance standard setters, as well as Islamic and conventional banks, and provides much needed focus on the key issues in Islamic liquidity management from the perspectives of these industry stakeholders. These insights are complemented with a study on the liquidity landscape in key Islamic finance markets, including an examination of the impact of recent events such as tightening monetary policies on the liquidity positions of Islamic financial institutions. Additionally, the report addresses main risk management considerations for Islamic banks aligning with Basel III standards. We are confident that the insights presented in this report will contribute towards fortifying the Islamic finance industry. Ladies and gentlemen, I welcome you to the launch of the report. Thank you.
Thank you very much, Dr. Omar. Distinguished guests, ladies and gentlemen, it is our pleasure to now invite Mr. Mustafa Adil, Head of Islamic Finance at the London Stock Exchange Group, to give a presentation on the inaugural Global Islamic Liquidity Management Report.
Thank you very much. Bismillah ar-Rahman ar-Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalam ala Sayyidina wa Nabiyyina Muhammad wa ala alihi wa sahbihi ajma'in. Distinguished guests, ladies and gentlemen, Assalamu alaikum and good morning. I am delighted to be here with you today to present the key findings from what I believe is one of the most significant reports related to Islamic finance that is being launched, which is the Global Islamic Management Report 2023. And the reason that I say we feel it is one of the most significant reports is because we all know that Islamic liquidity management has consistently been one of the most significant challenges that the industry faces across markets. Yet there is very little research and very little analysis around where the landscape currently sits and how the industry can address many of the challenges that persist. As Dr. Omar mentioned, the report is meant to be a global benchmark for the Islamic liquidity management landscape. It's meant to serve as a reference point for its readers so that they can understand how the landscape currently is shaped, how it differentiates across different markets, and most importantly, what are many of the recommendations that the industry can take forward to address some of these challenges. The report will cover an overview of the Islamic finance industry. It will provide an overview of the Islamic liquidity management landscape today. We do a deep dive into many of the key instruments that are used by different institutions across different markets. We look into the Islamic repo instruments that are being used and what role they will play in supporting the liquidity management needs of financial institutions. We look at liquidity risk management, and we speak to risk managers to try to understand how significant the challenge is and what are some of the instruments that they use to address some of the liquidity risk that they face. And finally, we highlight the role that IILM has played in supporting and addressing many of the liquidity management needs that the industry faces. As Dr. Omar mentioned, in addition to our analysis and our research, the report also contains many executive interviews from leading players in the market, including representatives of multilateral organizations, scholars, Islamic banks, standard-setting bodies, and so on across markets. And we also do a deep dive into many of these unique cases that exist in different markets, some of the unique challenges, some of the unique instruments, so that the reader has a better assessment of what the landscape looks like and what is happening across jurisdictions. To start with, I just want to highlight the significance and the growth of the Islamic finance industry overall, and Dr. Omar mentioned some of these statistics in his opening remarks as well. The industry currently is $4.5 trillion in assets. It grew by 11% in 2022. It had grown by 17% the year before in 2021. So it has the growth momentum that we see continues to fuel the growth and development of Islamic finance industry. And in terms of the split, about 72% of assets currently sit with Islamic banks. They are the largest segment within the industry. And about 18% of assets sit in the sukuk space as well. But what is particularly interesting is that the industry is highly concentrated. So the top 10 markets make up about 95% of total Islamic finance assets. But despite that, what is encouraging is the growth that we have seen over the last decade or so. Currently today, there are about 1,850 Islamic financial institutions that are operating in 80 countries around the world. What is more interesting is that there is 56 jurisdictions that have introduced some form of Islamic finance legislation or regulations. That means these are 56 markets that are looking to enhance the Islamic finance landscape within their own jurisdictions. And that is very encouraging because we know that growth will be derived from many of these emerging and frontier markets as we go forward. When we look at the liquidity landscape, what we have done in this report is we have actually analyzed the level of liquidity that exists across jurisdictions. We have looked at many different countries in Southeast Asia, South Asia, the Middle East, Africa, and so on, to look at where the liquidity position stands within the Islamic financial institutions in these markets. And we have also compared it to the conventional market as well. And a number of interesting trends emerge out of this. The first one that I want to highlight is the concentration of liquidity instruments that currently sit with central banks. So if we look at the overall breakup of total liquid assets, almost 50% of Islamic banks' liquid assets are either with placements with central banks, mandatory deposits, or balances sitting with central bank. And that's a full 5% more than the conventional counterparts. So there is significant more concentration in terms of liquid assets sitting with central banks. And the report goes into more detail as to how this is split up across jurisdictions. As I mentioned, we also look at the instruments that are being used in different markets. And, because central banks make up the largest contribution of liquid assets, we start with the instruments used by central banks. And there is a diversity of instruments that are being used. Every jurisdiction has their own unique instruments with underlying structures, with differing tenors, and tradability, which becomes very, very significant when we look at the market. And when you do a deep dive into these instruments, it showcases many of the challenges that exist. And what is particularly interesting, what stands out to us is even major markets like, for example, Pakistan, like, for example, UAE, although there is a diversity of instruments, tradability is a challenge. And there's very few instruments, in fact, there's no instruments in these key markets that are under 1 year or below tenor that are tradable. So that challenge continues to exist with these types of instruments that are issued by a central bank. Sukuk is another very, very popular instrument, and particularly short-term sukuk. And we're all familiar with the growth of sukuk over the last few years. But what is very, very interesting is the contribution of short-term sukuk that are 1 year or less in tenor to the overall market. So in last year, about 25% of total sukuk issuances consisted of short-term sukuks. And that is very interesting because we do recognize that the market is issuing instruments to cater to liquidity needs. And when we look at the split of that, Malaysia being the largest, followed by Kuwait, followed by IILM, and followed by the UAE, all major contributors to the short-term sukuk issuances in particular. Another key instrument that is used by many of the institutions is interbank placements. And in this area, there is limited diversity. The most common instrument that is used across markets is the commodity murabaha, although other jurisdictions look at wakalas, look at mudarabas. There are certain jurisdictions that look at compensating balances and so on. But we know that the industry in this particular area is largely dominated by the commodity murabaha instrument, which is not tradable, so that creates its own, and it's not HQLA in most cases because the counterparty is other financial institutions, so that creates a challenge from both a risk management perspective and from a liquidity management perspective for institutions. We also do a deep dive into Islamic repos because we know that in the conventional market there is a very strong structure, which is the repo, which is utilized by institutions who can use many of their assets to create liquidity in times of challenging market circumstances. So we look at the challenge of Islamic repos, and as you all are very well aware, differences of opinion across markets limits the tradability of international repos. At shallow depth in many markets, underdevelopment, Sharia challenges are all there that create a challenging environment for this. In this particular report, what we've also done is we've also highlighted many of the key discussions that took place at the IILM's 5th Sharia Roundtable in 2021, which focused specifically on Sharia-compliant repo markets. And this was held in collaboration with Islamic Development Bank, with IFSB, and with IOFI. And a number of discussions took place. They looked at different instruments. We looked at the implementation of IOFI standards. There was products recommended by the IIFM team, and so on. There was a deep dive into the Malaysian sale and buyback instrument and so. And general consensus was that the SNB, the Saudi National Bank instrument, repo instrument, the two independent WAD-based instrument was the most widely acceptable, but there were still certain elements and considerations that they need to do to modify it to make it internationally acceptable. But the challenge of repos in the Islamic space continues to be a key challenge for the liquidity management needs of Islamic financial institutions. And as I mentioned, one of the key areas was we looked at liquidity risk management. So when we look at it from a lens not just of generating profit, but also from a risk management perspective, how do Islamic banks manage their risks? What instruments do they use? What tenors do they use, and so on, to be able to address some of these risks? And we looked at some of the key ratios that they have to balance as well in terms of risk management. So when it comes to Basel III requirements, I mean, we're all familiar with the liquidity coverage ratio. We're familiar with the net stable funding ratio. Islamic banks, by and large, are comfortably above the 100% threshold that exists for both of them, with the exception of Bangladesh on the liquidity coverage ratio. And the report actually does a deep dive case study into the circumstances around what happened in that market and what was the outcome and how the Islamic banks in Bangladesh were able to go through a turbulent period when it comes to the liquidity needs that they had. So that is a particular case study that I think that we can learn a lot from, and it showcases the importance of why liquidity management solutions and instruments are required by the industry as we go through. Another interesting development that was highlighted has been the growth in Tier 1 and Tier 2 sukuks. And we have seen significant issuances grow in the last few years. And that becomes a key instrument that is now being used by Islamic banks to bolster up their capital and to continue to support the growth that they're achieving. And we saw a lot of growth in these instruments, particularly in the last 3 years. And this again is an instrument that we do a deep dive into so that it can benefit the broader industry and jurisdiction and Islamic institutions from different jurisdictions as well. So looking at all of these components, looking at liquidity across markets, looking at the instruments, looking at the risk management considerations, the repo considerations, we summarize this into many of the key challenges that exist across the Islamic landscape, and many of these would be familiar. There are limited Sharia-compliant instruments, limited secondary market trading, different regulatory environments, not a lot of infrastructure within markets and so on. And that is again challenges that I know many central banks and many institutions across markets are looking to address. And with that, the report also present some of the solutions or some of the key areas or recommendations that the industry needs to be looking at in particular to help address many of these challenges that exist. And that talks about harmonization of standards and regulatory treatment across markets so that you have intertradability. It talks about diversification of instruments. It talks about enhancing market infrastructure. And each of these recommendations have points and a way forward that different market players can look to incorporate and embed within their roadmaps and their strategies to help enhance the liquidity landscape in their respective jurisdictions. The report also looks at the IILM role, and I won't go into too much detail on this, but there are a couple of very, very interesting insights that I do want to highlight. As has been mentioned, as you are familiar, the IILM was an institution that was created in 2010 to specifically tackle the liquidity management needs of the Islamic finance industry. Issued its first instrument back in 2013, and since then there has been significant growth, and this year IILM achieved a major milestone, which was cumulative issuances in excess of $100 billion, which has been a phenomenal growth trajectory for the IILM Sukuk program. And what is also very, very encouraging is the enhancement of the tenors. And we have seen, from very, very modest beginnings back in 2013 of less than $1 billion in issuance, all the way through to 2021 and 2022, which with 14 billion respectively in each year. And Dr. Omar mentioned in his remarks how the impact of the COVID, had that additional need that IILM was able to scale up their program in particular to be able to tap into that demand. For those who are not familiar with the IILM instrument, we do provide an overview of the structure and how the instrument is issued and what are the underlying assets and how the overall IILM program operates. But what I want to really focus on in my remaining time is two unique insights. One is on tradability. So we know that the lack of tradability of instruments is a major challenge, but what we have seen based on the data that we have looked at is that the IILM Sukuk program, the secondary market trading of this is quite significant. And if we look at the last 2 years alone, the majority of the programs are traded, only a small minority, anywhere from 10% to 35% is used, held to maturity. The rest are traded in the secondary market. So again, the IILM's objective of having a tradable instrument that can be used by the industry is being put into place in action as we see the tradability of these instruments. And then the last thing that I want to look at is, how that program has developed over the years. And really, when we look at each of these statistics, they are significant, right? Because we have to understand the objective of the IILM was to provide an instrument that can be used by the Islamic banks to manage their short-term liquidity needs, right? And we see that happening today. So the nature of the investor, almost 80%, 79% of the investors in the IILM program are Islamic institutions compared to conventional. When we look at overall sukuk, we know that about 50% of investors in sukuk are conventional, right? So there's significantly more investment in the IILM program by Islamic institutions, and that helps showcase that they are using it for their liquidity needs. It's serving the purpose. When we look at the geographic distribution, this is meant to be an international instrument, and we see that the split of the regional breakdown in terms of investors is very, very close to the breakdown of global Islamic finance assets. So again, where the markets have depth, the instrument is being utilized more and more. And when we look at the type of investors, if you take banks, if you take the government entities, which includes central banks, ministries of finance, and multilateral institutions, 90%, 95% of the investors in the sukuk are banks or these types of government entities, which are the intended market audience for the instrument. And if you look at the breakup of the investments by tenor, again, if you have a liquidity management instrument, you're expecting 1 month, 3 months, 6 months to be the predominant issuances where investors are investing the bulk of their funds. And we see that very, very effectively here in this slide. So ladies and gentlemen, that was just a couple of the key insights and findings from the report. I highly recommend that you download the report. You do have a QR code in front of you, which you can use. Please scan it into your phone and you will be able to download the report. I recommend that you go through the report in detail. And if you have any questions, we'd be very happy to respond to that as the roundtable continues. With that, I'll hand it back to RMC. Thank you very much for your time.
Thank you very much, Mr. Mustafa, for your insightful presentation. Distinguished guests, ladies and gentlemen, we will now take a break for 20 minutes. Refreshments are available in the foyer of this hall. However, before we disperse, we would like to kindly invite everyone for a group photo session to commemorate today's roundtable. Could I kindly invite everyone to gather in front of this backdrop for the group photo, please? As a final heads up, once you're done with your break, kindly convene back in this hall at 11.
What's your sign? What's your sign? What's your sign? Baby, what's your sign?
What's your sign?
What's your sign? What's your sign?
I'm Cancer, the great romancer. Come on, baby, tell me, what's your sign?
What's your sign? What's your sign? What's your sign? Baby, what's your sign?
Come on, baby, I gotta know.
What's your sign? What's your sign? What's your sign? Baby, what's your sign?
What do the stars say about you and me?
What's your sign?
Aries, Taurus, Gemini, Cancer, Leo, Virgo, Libra, Scorpio, Sagittarius, Capricorn, Aquarius, Pisces,
What's your sign? What's your sign? What's your sign? What's your sign? Baby, what's your sign?
I bet you're a fire sign.
What's your sign? What's your sign? What's your sign? Baby, what's your sign?
Am I right? Come on, tell me.
What's your sign? What's your sign? What's your sign? Baby, what's your sign?
It'll be our little secret.
What's your sign? What's your sign? What's your sign? Baby, what's your sign?
Oh, come on.
What's your sign? could go on seeking lovers since our record has turned over. I'm a watching wheels of bridge a tower. Dark, softly, dark, on the other side. Dark, softly, dark, on the riverside.
this mambo in the night. This mambo tonight. So ask yourself this question: is this how love is supposed to be? Said I'm leaving. Have I made myself clear? Every time I find someone, I find myself here. No more screaming. There'll be no more lies. Packed up all my things to go. Even made my flight. So how did you find your way back in my life? How did you find your way? I can't tell it, how we make this thing fly. I really thought we'd work it out after all this time. But this ain't how love's supposed to be, in and out of harmony. So I packed up all my things, there was nothing left to say. So how did you find your way back in my life? How did you find your way?
you, baby, in my groove. Now that I got you, let's get smooth. I know I got you in the mood. Now that we're here together, let's get smooth. It's not the weekend, it's a working night. We got to go to work tomorrow. I don't want my music too fast tonight. I just wanna get my head right. Just a drink or two, something smooth. I don't want to shake my body, I just wanna groove with you. I just wanna groove with you. Groove with you. I caught you, baby, in my groove. Now that I got you, let's get smooth. I know I got you in the mood. Now that we're here together, let's get smooth. Something smooth and jazzy. 'Cause I'm too cool to get all hot and sweaty. I just wanna chill, get my head relaxed now. Feel the groove, don't feel like getting nasty. Just feeling smooth. So let's get smooth. Let's get smooth. I caught you, baby, in my groove. Now that I got you, let's get smooth. I know I got you in the mood. Now that we're here together, let's get smooth. Lounging back now, enjoy the view, being in each other's company. You know me, I'm a freak like you. But there's other times that we can get down. Nothing like a moment, calm and cool, just chillaxing. Now we smooth.
Here she comes, she moves just like the wind. Nothing seems to change the mood she's in. So calm and assured, who would think this girl had any cares left in the world? Can't she see the fire she leaves behind? Breaking hearts with beauty she denies. Innocent fun, capturing everyone. And when she smiles, the whole world knows.
Welcome back, distinguished guests, ladies and gentlemen. Feel free to bring your coffee and teas back into the hall. Before we kick off on session 1, I would like to inform our participants online that the report is now available for download via the link that is shared on a Zoom chat window. Ladies and gentlemen, we are honored to announce the presence of esteemed high-level participants from institutions such as our shareholders, Central Bank of the Republic of Turkey, Qatar Central Bank of Nigeria, Bank Indonesia, and the Islamic Corporation for Development of the Private Sector. We also have high-level participants from our primary dealers such as Al Barakah, Bubian Bank, Abu Dhabi Islamic Bank, and key institutions such as the Indonesian Hajj Fund Management Agency, Al Janub Islamic Bank, Golden Global Bank, Al Barakah Bank Egypt, Prometea, as well as Ziraat Portfolio Management. Ladies and gentlemen, we will now start session 1 on the global Islamic liquidity outlook, exploring key instruments. We would like to welcome our moderator for the session, Mr. Mustafa Adil, Head of Islamic Finance at LSEG. Mr. Mustafa heads LSEG's Islamic Finance business, providing tailored solutions and services to drive the industry's growth. He collaborates with government entities, financial institutions, and multilateral organizations, offering support in content solutions, research, consulting, and market engagement. Prior to joining LSEG, Mustafa was a lead consultant in the Islamic Financial Services team at Ernst & Young, advising leading Islamic financial institutions in the GCC and globally. Mr. Mustafa Adil, the floor is now yours.
Thank you very much, Monet. Bismillah ar-Rahman ar-Rahim. Ladies and gentlemen, I am delighted to be here with you again to host the first panel session of the day, which is going to be covering Global Islamic Liquidity Management Outlook, exploring key instruments. I think that the earlier sessions that we had, including the keynote address that was delivered and the presentation, helps to set some context as to where the Islamic liquidity management landscape currently sits, what are the key instruments, what's happening across jurisdictions, and now very much, what I would like to do with the benefit of the panelists that we will have in our session is to do a deep dive into understanding what is the outlook for Islamic liquidity management. How well have we addressed some of the challenges? What are the experiences that we see in different jurisdictions? And what does the outlook look like going forward? And for that, we are extremely privileged to have some esteemed speakers with us from across different markets, both virtually and in person. And I would like to introduce my speakers. We have Mr. Bashar Al-Natur, who is going to be joining us virtually. Bashar is the Managing Director and Global Head of Islamic Finance at Fitch Rating. We have Ms. Khulsum Dolgun, who is a Senior Specialist with the Markets Department at the Central Bank of the Republic of Turkey. We have Mr. Sohail Isa Al-Zajjali, who is the Assistant Secretary General for Membership Engagement and Resources at the Islamic Financial Services Board. We have Dr. Dadang Muljawan, who is a Director at the Department of Sharia Economics and Finance at Bank Indonesia, who is going to be joining us virtually. And we have Mr. Hisham Bghnis, who is the Executive Director for Business Operations at the International Islamic Liquidity Management Corporation. Ladies and gentlemen, thank you for being with us today. So with that, we have 5 speakers, we have an hour, we have a lot to get through, and I really want to make sure that we have time for audience engagement. So please do note down your questions, as we will definitely allocate time for audience Q&A. And to those who are joining us virtually, please do share your questions using the tools that are provided, and the organizers here will be providing me the questions that are coming in from those who are joining us online, so that I can pose those questions and get feedback and insights from our distinguished speakers. So without further ado, let us get into it. And Bashar, I would like to start with you. I hope that you are with us and you can hear us. You have the, I would say, broadest context in terms of looking at multiple markets as the head of Islamic finance for Fitch Rating. So from your perspective, you've been in the industry for many years, you've seen it develop over the decades. How has the Islamic liquidity management landscape developed across different markets, and where do you see it going?
Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you very much for having me. I think when it comes to it worth pausing a little, because it's not like just one element of the Islamic finance industry. It's the actual blood of the Islamic finance industry. What do I mean by that? So the whole start of Islamic finance came at the back of depositors putting their money in banks that they want to invest in a Sharīʿah-compliant way. And that created liquidity. Now that is the nucleus of the whole Islamic finance industry. Of course, there is many other elements, but without that money to start with, of course, you have equity and you have other sources of funding. But deposits is the main source of funding for banks, Islamic banks. So it is the largest sector. Now that money has to be invested. And that money has to be kept also for liquidity and regulatory instruments. So for me, when you're talking about liquidity, it's a multi-dimensional issue. First, liquidity in institutions. And here we're talking about banks, capital companies. You can add to that fund management and what have you. And as instruments. So as an instrument. There are two different things. There is interconnection. But at the end of the day, it is definitely something that you need to have, and you need to maintain some and invest some. And I think the key issue for the Islamic finance industry, there is many other issues that we can dive into, but do we have enough venues to invest that liquidity? Do we have enough venues to raise that liquidity other than deposits, which is the main source of funding there? So for me, the picture is really fragmented. But if I look at the rated universe that we have, I would say liquidity in general is solid. But the ratings is mostly in countries where the banking systems and finances evolved. If you look beyond that, OIC 57 countries, I think the story becomes more challenging. And you can have differences. And even in these evolved markets, there is their own specific challenges that they're facing. Now, all what I've said, I compared that to the conventional. And then the story becomes more limited. So at the start, it is an integral part of the industry. It is something that is multidimensional and it has its own challenges, but it is vital for the existence of the industry.
Thank you very much for that, Bashar, and I couldn't agree more with your sentiment that it's not a homogeneous landscape. When you move from a developed Islamic finance market to a developing Islamic finance market, when you compare it to the conventional landscape, there are unique challenges that persist. And with that, I think we're very privileged to have Sister Kulsum with us, who we can do a deep dive into perhaps what's happening in the market in Turkey. And Turkey is obviously a jurisdiction that has a very well developed banking system, a very well developed banking market, but a developing Islamic finance market. So Sister Kulsum, from your perspective, what have been the major developments of specifically liquidity management for participation banking in the region? And can I just ask the organizers to please get a microphone for the speaker, because she doesn't have. Can you use that? Can it reach over? I don't think it's long enough. Can this one reach?
Okay, is it enough? Can you hear? Is it better?
Is that all right?
Okay, thank you. Assalamu alaikum, dear respected participants. Thank you very much, Mr. Adil. When we look at the sukuk market developments in Turkey, actually we see that it starts from 2010. Since then, several amendments have been made regarding the regulatory and legal framework to develop the sukuk market. After the introduction of asset leasing company and first sukuk regulation, first ijara sukuk was issued by the Turkish Treasury in September 2012. And after that year, there was no asset available until that year. Therefore, as a central bank, we couldn't provide any facilities to the participation banks till that time. After those years, Turkey's sukuk issuance increased, and in 2021, Turkey became one of the top countries in sukuk issuance and in the outstanding value too. By Ministry of Treasury and Finance, both international and domestic sukuks issued. In domestic issuances, we see that it's around 11.1 billion in the outstanding value for now, and in domestic one, it is 450 billion Turkish lira. We also issue in domestic market gold and FX denominated these certificates. Those are issued in the domestic market, and both conventional and participation banks can participate in those issuances. During last 5 years, Ministry of Treasury and Finance issued international lease certificates. They issued international lease certificates, and regarding those issuances, excessive interest of the participants was observed. When we look at the last issuance of the international issuance of this certificate, we see that the Western countries' trend is increasing, in an increasing trend. There are also sukuks issued by the participation banks too. They issue in the domestic market, mostly Turkish lira-based these certificates. In 2021, the total amount was close to 100 billion Turkish lira, but now it's slowed down and reduced to 60 billion Turkish lira in amount. As Ministry of Treasury and Finance issued Turkish lira lease certificates, we started to provide facilities to the participation banks in Turkey, both FX gold and Turkish lira facilities actually we started to offer. For instance, in October 2021, these certificates are accepted as a collateral in the open market operations of the Central Bank of Republic of Turkey. Then we also accepted IILM sukuk in October 2014 as the additional collateral. It's used for the margin call purposes. Now participation banks can use those collateral to participate in one-week repo auctions, quotation repos, and late liquidity window facilities. They can also take part in the Borsa Istanbul committed transactions market, in repo and reverse repo markets. CBRT acts in those markets as a player. Repo facilities are, as you told before, are based on what contract, which are sell and buyback operations. Therefore, they can be used by the participation banks without Sharia concern. CBRT's WAD is not binding here to provide the Sharia compliance actually. CBRT also have deposit facilities, as you said, interbank facilities, but those cannot be used by the participation banks because they are based on long contract, therefore they cannot be used. But we are working on some projects to provide participation banks similar facilities actually. In CBRT we also have FX and gold transactions which can be used by both conventional and participation banks. CBRT's main purpose is to provide a tool and add flexibility to the Turkish lira FX and gold liquidity management of both conventional and participation banks through FX, gold, and swap transactions against Turkish lira. Those transactions can be arranged at the CBRT or BIST and can be executed by quotation, auction, or direct methods. Thank you.
Thank you very much, Sister Gulsum, and it's very, very fascinating and very encouraging to hear that since the first issuance 10 years ago, 2012, of the first sukuk, the market has developed so much where participation banks have the access to sukuk, they have lease certificates, the IILM instrument is used, there's a repo mechanism, there's an FX and gold transactions mechanism. So it's good to see that these products and the solutions are available to the local market. Dr. Dedang, I want to come to you now, and similarly how we heard about what's happening in Turkey, I wanted to get an assessment of how the Islamic liquidity management landscape is developing in Indonesia. And we know that Indonesia is obviously the largest market when it comes to the Muslim population, and there has been for the last few years a renewed focus on developing the Islamic banking sector in Indonesia. So a key component of that will be the Islamic liquidity management landscape. So we would love to hear from you if you could share some of the major developments in that area in Indonesia.
Okay, thank you very much. First of all, I'd like to thank the organizer for inviting me to share experience and development in Indonesia. So, Alhamdulillah, it's been more than 2 decades that Islamic banking system, as well as capital market and the insurance, takaful industry have been developing. And Alhamdulillah also that we can keep the speed growth a little higher than the conventional. Secondly, that attract the attention by the central banks. Of course, while we have the sector developing, we have to keep and we have to be able to maintain stability of the system. And then of course, we are glad to have greater contribution of this industry to the nation. But again, ability to maintain the robustness is also very important. So that's why developing the liquidity market has become one of our top priority, particularly in developing the infrastructures as well as the instruments. And then as we can see, the global market has become more and more dynamics. And then sometimes pressures come and goes without we expected before. And then the system has to be able to create kind of efficient market resolutions. That's why we from central bank, of course, from our perspective, it will be very important to develop the market ability as well as of course for central banks to also create instruments. In the industry development, for example, we push the market to do a further development, like for example in the repo market. Of course, there's some challenges because we have to be able to combine financial perspective as well as Sharīʿah-compliance that sometimes takes time for us to resolve and to come up with efficient instruments. And then secondly, of course, central banks take part in this development by issuing what we call the Sukuk Bank Indonesia, which basically try to connect the government instrument as an underlying. And then we do a similar model, the IILM. It's like trans long-term equity-based instruments to become liquidity instruments. And Alhamdulillah, we have seen over time, including the recent liquidity pressures, that this kind of mechanism, including instruments, can serve as very efficient and effective secondary reserve for Islamic banks to reserve liquidity. And for in the future, of course, we want to have further development, more innovation, particularly when digitalization is coming to this industry, including the Islamic Financial Industry, where innovation and dynamics becoming more and more greater. So of course, this is the landscape that we have a spirit to always develop infrastructures, instruments, and mechanisms. Thank you.
Thank you very much, Dr. Dadang, and for highlighting those developments. And we have seen in recent years the launch of many different instruments, including the Bank in Indonesia Sukuk instrument, the Sharia certificate, the foreign currency Sukuk instrument that have held that. And you very likely touched upon the topic of innovation, which we will come to later in our discussion. But that is going to be a key driver, not just on the liquidity side, but across all operations of Islamic banks across the world. Sohail, I want to come to you. So we've heard, from a global perspective, what's happening in Turkey, what's happening in Indonesia. But you look at this from a very, very unique segment, which is the prudential consideration and the risk side. So, from your perspective, how do the recent developments in the markets address the challenge that Islamic banks face when it comes to liquidity risk management?
Thank you. Assalamu alaikum wa rahmatullahi wa barakatuh. Wa salatu wa salam ala Sayyidina Muhammadin wa ala alihi wa sahbihi ajma'in. First of all, I would again thank you, the organizer, for inviting IFSB to this important roundtable, which we really think it will enhance and give that opportunities to everyone and to the market as well to understand the challenges in the liquidity management around the globe for Islamic finance. And again, I want to congratulate the IILM on their 10th year of the Sukuk program and launching of the Global Islamic Liquidity Management report as well. So I just wanted to highlight a couple of points here, which maybe I will go by the status of and the outlooks of our report, anywhere like which we stability report, which we do for 2023. And then I will go through the challenges which the market and playing and what IFSB have done recently to overcome some of these challenges. Based on IFSB Stability Report 2023, Islamic capital market grew by 6.1% on year-to-year basis. The sector represent about 30% of the total Islamic finance industry in 2022. For stability perspective, the Islamic capital market conducts remaining relatively in 2022, but there is some challenges which the market really faced, such as weakening the global economic condition and uncertain macroeconomic environment. The inflation rate, for sure, it's really affected the global market, which brought these challenges in 2022. With the Sukuk insurance growth by 2.3%, where primary market issued around 190 billion US dollars. The growth was moderate due to the unfavorable global economic condition and reduced sovereign issuance. However, there was a slight positive impact from stability-linked Sukuk issuance for developing projects and new sovereign insurance response to the global economic recovery. With that, I just wanted to highlight a couple of these points. Then I will maybe talk about the challenges which the faced by Islamic finance. Even some of them already been shared and by our panelists. For sure, the liquidity supply of short-term Sukuk is one of the challenges which everyone is facing in Islamic industry, which I think IILM is doing even a great job on some of perspective for their members, and we hope that it will be covered soon, inshallah. Insufficient tools to meet the high quality liquid assets criteria. This is again a challenge which it's still going on, and the Islamic finance is facing. One of the next challenges which I'm going to talk about is depending on the commodity murabaha transactions as well. Exclusive use of these transactions lead to different kind of challenges. Shortage of Sharīʿah compliance foreign currency instruments, again, this is one of the challenges. Lack of reliance Sharīʿah compliance lender of last resort facilities, lack of Sharīʿah compliance collaterals, different interpretation of Sharia ruling as well. This is challenging, which it's really very difficult to overcome unless we come together all and harmonize all of these things. What IFSB have done? IFSB have recently this year the council, IFSB's council approved the technical note 5 specifically, which is entirely talking about the liquidity risk management tools for Islamic banks. The purpose of this technical note to evaluate the available tools which is there or potentially available for Islamic financial services and provide guidance on how to use them. So I really emphasize on this technical note. I wish everyone can download this from our websites. It's available there. It's really beneficial for everyone to go back and check these tools. Maybe I think Mr. Adil was waiting. Then I don't want to take lots of time. Then maybe later on I will add some more comments. Thank you very much.
Thank you very much, Sohail, for that. And I'm very, very pleased that you started your comments with reflecting on the macroeconomic conditions, because I think that is something that we sometimes lose track of, right? The purpose of having a robust liquidity management framework and liquidity management instruments is so that in periods of economic challenges, macroeconomic shocks and other things, the industry has the capability to be able to access liquidity, to be able to sustain themselves, right? And that mitigates the risk. So I think that is very, very relevant. The ongoing challenge of HQLA, that's something that I think we will come back to as well. And a number of risks that you mentioned, which I think many of us are familiar with, the overuse of commodity murabaha, the challenge around FX related things, the absence of lender of last resort in many jurisdictions, which is a very significant issue for the Islamic banks vis-a-vis the conventionals in those same markets as well. Hisham, I want to come to you next. And you've heard from all the speakers about recent developments, about challenges that continue to persist despite so much development that is achieved. IILM was an instrument that was meant to play a critical role in addressing some of these issues, right? So from your perspective, over the last decade, 10 years since the first issuance, how has the industry developed in the markets in which you are active, and where does IILM fit into the liquidity management landscape in those markets?
Thank you, Mustafa. Assalamu alaikum, everyone. Indeed, the IILM has been established in 2010 to fill the gap of Islamic liquidity instrument. At that time, you had only murabaha instruments, as we know, that are not tradable, and only few sukuk issued by sovereign. So the IILM started by issuing $500 million in 2013. And since the last 10 years, we have crossed, as said earlier, the $100 billion total issuances by offering multiple tenors from 2 weeks up to 12 months. And this to address different market needs. Out of this $100 billion issue, 40% were issued for the past 3 years. So we accelerated the path of offering more and more supply to the market to address the need. And by issuing different tenors, we managed to complete the issuance of money market curve from our regular issuances from 1 month to 12 months. We have a specific ABCP program, which is a Wakala structure, supported by 10 primary dealers across the GCC, Southeast Asia, and Europe. Now we have also in terms of secondary market, we have reached $3 billion traded this year. Cross-border, so not only in specific jurisdiction, we're seeing more and more flows traded. But compared to 10 years ago when we started issuing, of course, you have more alternative instruments in the market available. Of course, you still have some shortage, but in terms of HQLA and the space where the IILM is, you have only IILM Sukuk, at least in foreign currencies, and the ISDB Sukuk, and of course, some of sovereigns Sukuk that can be considered as HQLA. So you still have a lot of murabaha for interbank placement. We want to play a role of alternative and complementary to the other instrument available in the market. We have seen also recently more and more regulators, central banks offering short-term instrument for their own jurisdiction in local currencies, also in foreign currencies like Dr. Dadang was referring to earlier in the SUVB that have been issued recently. And all these instruments or Wakala deposit offered by central banks need HQLA instrument to back and underpin their short-term tools in local currencies. So you also have more tools available now in the market, more demand, but again, because the demand is higher, less instrument to fulfill the demand, not only for the market players, but also for regulators that want to offer the short-term instrument to their market. In 2023, this year, we have issued 36 sukuk for a total of 11.5 billion, which represented more than 25% of the total dollar sukuk offer in the market. So 1/4 of the total sukuk offer in the market. So as I was saying, we believe the IILM has been reaching a certain level where we complement other tools offered by regulators. And we want to continue and grow our offering to the market, specifically to address market needs.
No, thank you very much for that, Hisham, and I couldn't agree more. And when we worked on this report together, and you look at the data, exactly what you're saying is, confirmed by the data that we have seen. Very, very interesting that you mentioned about the ramp up, particularly in the last 3 years, which will hopefully mean that the next 100 billion will be achieved in a lot shorter time than the first. But it's fascinating to see 40% issued in the last 3 years alone of that. And I think that brings me nicely to my next question, which is for Bashar. So Bashar, you've heard from all the speakers. You mentioned in your initial remarks about having to look at segregating the market into developed and less developed, and the different challenges that persist. We heard about what's happening in Turkey, Indonesia, and from risk perspective. In your view, looking at the Islamic finance industry globally, what are the 2 or 3 biggest challenges that continue to persist that we still haven't adequately addressed when it comes to Islamic liquidity management? The 2 or 3 biggest challenges that continue to persist in the industry today.
Okay, I think that's an interesting question. And to put it into the top 3. Let me make it in a hierarchy. So the first one is that it is the development of the banking sector and the debt capital market in where Islamic finance is active. So it is not an Islamic finance related issue, but it is where Islamic finance is actually active. You have some countries, specifically if you're talking about the GCC, they have a bank penetration, they have advanced banking system, and they are starting to develop the capital market. You have the likes of Malaysia to some extent, you have the likes of Indonesia, the likes of Turkey, that is trying to do that. But if I am looking at only the 57 countries, OIC, in other countries, there is no bank account, let alone Islamic bank account. So there is fundamental challenges in the infrastructure of banking and debt capital market. Of course, it's more that, but I'm focusing on that. So that's number one. So there is a challenge in the development of that ecosystem in many of the countries where they are classified as Muslim countries. If I zoom into the Islamic finance, even in the advanced market, now you need to look at it, okay, I have an advanced system. Is it operating in a pari passu status between Islamic banks and conventional? And the vast majority of countries, the answer is no. It's not only not having access to last results. So you have banks placing money with the central bank for free because it's Sharīʿah-compliant, or taking that money and giving it to charity. You have banks that cannot operate in the interbanking system because they don't have other Islamic banks. In some advanced countries, you have actually Islamic banks only able to operate with Islamic banks, with the conventional banks. So it's a dimensional issue wherever you look, i.e., do I have the same access similar to the conventional? So yes, I have a constraint, let's say banking system and debt market, but even within that constraint, am I facing, do I have the same accessibility similar to conventional? The answer is no. So that's the second dimension. And under that dimension, by the way, there is a lot of challenges. So I'm just putting it in dimension. Now the third dimension, which is maybe narrower, I think it's taking lightly. So high quality is not something that's easy. If we are looking at the rating of the vast majority of Islamic countries, not many of them are Islamic. Investment grade. Investment grade is B- and above. You have definitely some, actually more than 80% of the 150 billion outstanding that we rate in Q3 is actually investment grade. But if I look beyond the key players, that is not something that is guaranteed across the board. So having high quality credit quality, liquidity instruments is another challenge. You could have a liquidity instrument, but it doesn't have the high quality side of things. So as you can see, it's a three-dimension, and I've limited my question to three, although the list can go on.
No, thank you very much, Bashar, for that limitation. I think that alone, when we put it in that context, is very, very daunting task for the industry. And, the fact that you mentioned, we can talk about development liquidity management if we want, unless we have broad infrastructure in the banking sector, unless we have banking access, unless we have DCM markets, then that challenge persists. We can have excellent instruments, but if Islamic banks in markets don't have counterparties that they can interact with, then that is a persistent challenge. And then the issue of HQLA, when we look at OIC countries, generating high quality, any kind of high quality asset, not just liquidity asset, becomes a major issue there. I think, Sohail, I want to come to you with this. In light of what Bashar has said, how do you see the industry tackling some of these issues that go beyond, frankly, the industry as well? And then to add another complication to that, there is now a global drive to incorporate sustainability and ESG into the finance sector and the banking sector. So that is another consideration. Not only are we trying to build the basic infrastructure, we're trying to, develop assets that can be used for HQLA purposes or the liquidity management purposes. Now we have to add another dimension of ESG considerations into that. So how should the industry go about tackling this, and what should be the key priorities that they should be looking at?
Thank you very much. It's really interesting question again, and Mr. Bashar, I think he brought the challenges and the risks which really faced by the industry itself. From IFSB point of view, we are now currently working on lots of feedbacks from our members. Luckily, we have the regulators, we have the market players who really highlight the challenges which is faced by the industry itself. IFSB's role is always here to bring the harmonization to the industry. So by understanding all of these challenges, by getting the feedback from the market, from the regulators, from the market players, we can create that regulatory framework which can really support the industry to be to overcome these challenges. We totally understand it's not an easy thing to do, but it's still we believe that it can be overcome by the understanding of the challenges we faced. There is nothing comes free. There is lots of challenges which faced and overcome during all of these years. We can see good examples of issuing as well. You mentioned about the environment, social governance, sukuk market development. There is lots of things which is developed even in Turkey itself. We can give an example of Turkey. They recently as well developed around green sukuk for 6 months lease, as Ms. Gulsum already mentioned. So the challenge is all can be overcome by coming all together, the regulators, the supervisors, and the market players all together to broaden the challenges, to bring even the ESG risks management, to moderate the market, and IFSB to for sure to support on the regulator side and the regulatory side, the standard side. So we hope by near future, lots of things will be overcome, and the regulators is still there working to improve from their side, and the IFSB always get this feedback, and we are working towards improving the market risk overall. I'm not saying just only for the specific risks which we have, inshallah. Thank you very much.
No, thank you very much, Sohail. And particularly, your point about harmonization, I think, is very, very important, because a lot of the challenges that do exist in terms of infrastructure, in terms of counterparty and so on, can be addressed to a certain extent if you enable cross-border access and cross-border liquidity. Sister Khulsum, just very quickly from your side, in light of the challenges that were raised, from your perspective, what is the most significant challenge that is being faced by participation banks in Turkey when it comes to liquidity management?
Thank you. Actually, one of those challenges can be, for example, conventional banks and participation banks can both attend the sukuk issuances. However, participation banks cannot attend in the bond issuances. And the Minister of Treasury and Finance sometimes issue sukuk very rarely. And from their side, participation banks sometimes complain about that thing. And they cannot borrow, or they cannot buy enough sukuk from the treasury. Therefore, it can be their challenge actually. One of them can be another one. Can be participation banks cannot use our deposit facilities. It's another challenge of them. When they have excess liquidity, they cannot bring it to the CBRT. Therefore, with the establishment of the Borsa Istanbul committed transactions market, that difficulty is overcome in somehow, but still we as a central bank do not provide a facility for the participation banks. But we are working on that, and now we are working on Vakala facility, Vakala-based facility. So hopefully, inshallah, we can work on that and finalize.
No, that is very, very good to hear, and I completely agree. You know, the issue with conventional versus the participation banks, there's few sukuk issuances, and when they're competing with the conventional, you know, they're not able to access them in the same capacity. The challenge of the deposit as well with the central bank is an issue. But the Wakala instrument, the Wakala facility that you mentioned, I mean, we've seen that in many different markets, in Oman, in the UK and others, and it's gone a long way in helping to address some of these challenges. That's good to hear. Dr. Dadang, the same question to yourself. I mean, in light of the context of the challenges that, you know, we've heard globally, from your perspective, what is the biggest challenge that Islamic banks face in Indonesia when it comes to liquidity management?
Okay, thank you. Thank you. Things that can be considered as the major challenge for the Islamic liquidity market development. Number one, as I said earlier, is innovations. Of course, we need to also try to strike the balance between financial efficiency and also prudentiality and the Sharīʿah compliance. Number two is about the ecosystem development that include developing the investor base. Number two is supporting infrastructure that has also been developed very, very efficiently. And number three, of course, the product itself. So basically, we need to minimize as much as possible the fragmentation in the market because you know, if fragmentation exists, and it means that the market becomes inefficient for players to manage their liquidity. And lastly, I also emphasize the connections of every initiative to the macroeconomic nationwide. So we need to be able to translate risk and return profiles as well as the assessment, come up with comprehensive assessment and development program. So those three elements has to become major priority for particularly the authority like Central Bank as well as Financial Services Authority to develop systemically. Thank you. Thank you.
No, thank you very much for highlighting those challenges. And I want to remind the audience that we will be opening this forum for Q&A, so please keep your questions ready and indicate to me, and I will come to you. But before I do that, I want, Hisham, one final question for yourself. I mean, A lot of the challenges that we hear, Bashar mentioned the absence of high quality liquid assets, Sohail mentioned harmonization. We had the issue of, lack of products available in Indonesia and Turkey, and, competing with conventional to access that. The IILM Sukuk program actually addresses many of these challenges. So from your perspective, how far along does the IILM program go to tackle some of these, and where do you see it going forward?
Thank you, Mustafa, for the question. Actually, on our side, as we were saying earlier, we have a $4 billion program. We have increased from 3 to 4 billion in 2020, and we have increased our offering by 80% during the COVID to supply more of our instrument as a safe haven instrument during the COVID-19. We started the year at close to 2 billion. We ended up at $3.51 billion. So $4 billion is still a small program in terms of size. We want to grow our assets to address the market needs. As Bashar was saying earlier, there is some difficulty in terms of increasing HQLA because on our side, the assets that underpin our short-term sukuk needs to be only sovereign-based or government-related entities that are rated A and above, or with credit enhancement. So there is a certain limitation in terms of that ratings or highly rated sovereigns. Also, we need to ensure we have a high tangibility asset ratio to ensure widen acceptance of as a Sharīʿah-compliant instrument that can be tradable everywhere and accepted as a Sharīʿah-compliant tool. And if we add the sustainability angle, as Brother Sohail was mentioning, it limits further the pool of assets that will be eligible for a sustainable HQLA instrument. So what we want to do also going forward, apart from growing our asset, is working closely with members and non-members to provide more of this short-term liquidity instrument in other currencies and specifically in local currencies. So on our side, we can issue over reserve currencies, and we have more and more requests for instruments in euro and pound specifically, even in Sing dollar also from the market. We want to continue attracting new investors. So this year we had close to 20 new investors and tap new markets. Specifically, we have seen a strong development in Turkey market that last year represented only 2 to 3%. Now it's close to 13% of our investors, both at primary and secondary, thanks to our primary dealers. We have targeting new markets also in Indonesia and Saudi Arabia. We want to spread awareness more about the liquidity management tools, of course about the IILM, but the Islamic liquidity management and its importance for stability of the financial market by developing such events and capacity building. We have a dedicated capacity building tomorrow for the Turkish market specifically. We want to work further on the HQLA treatment of the instrument. We have HQLA regulatory treatment from our members, and also we fit in the classification of non-members. So we want to work towards a harmonization of the HQLA instrument for the IILM Sukuk. And in terms of issuance strategy also, the liquidity instrument is not about only short-term, as you rightly said. We have been in the markets focusing on the money market side, so up to 1 year. But liquidity tools is about liquidity, and we need more of long-term tenors instruments. So IILM has been filling the gap up to 1 year. Most of the sukuk issued have been above 5 years. We have seen recently 3 years sukuk and above. But you still have a lack of, on the belly of the curve, between 1 and 3 years, and higher demand for that. Also, in the frequency of our issuances, we have been issuing an average $1 billion every month. But you don't manage your liquidity on a monthly basis, rather on a daily basis. So it's something that we're looking at in terms of offering more often and increasing our frequency of issuances. And last but not least, we have been issuing through competitive bidding methodology with single price auction that have been working well for the past, since 2018 actually. But we are thinking also to consider and explore with the market to move to what we call discretionary competitive bidding to better reflect price discovery for the paper, where you can reach a full Islamic money market curve. Thank you.
Thank you very much, Hisham, for that overview. Ladies and gentlemen, I'd like to open the floor now for questions. Please do indicate to me if you have questions. And for the audience online, please feel free to share your questions using the tools that are available. I will start with the first question that I've received here online. And Bashar, I think I'll direct this towards you. And the question is that with the rise in interest rates, we have seen issuances in the market decline this year. What is the expectation for the next year in terms of overall Sukuk issuances from your side?
Okay. I might not fully agree with the decline of Sukuk issuances because it depends on what pocket that you're looking at. But you have to bear in mind that Sukuk is not cocoon from what's happening in the global industry, including increasing interest rates, lack of appetite for emerging market. But since we are in a liquidity roundtable, you have to bear in mind that there is one big advantage for Sukuk specifically. It is having the liquidity of banks, specifically in the GCC and other countries, being solid. i.e., you have an investor dedicated to Sukuk, an Islamic instrument that can only invest in Sukuk and has liquidity, and the supply and demand is in the favor of more demand than supply. So that actually helped the industry, and even Q4 of this year, we saw a healthy pipeline of issuance. So with the supply-demand imbalance, having more demand than supply, that is supportive of growth. Secondly, many of the countries on the oil exporters, although they are not facing deficits, but they are diversification, diversifying their funding. So we saw this year, for example, Saudi Arabia issuing in the international market. They continue issuing in the local market in Saudi Riyal monthly. UAE, for the first time, issued the Sukuk in UAE dirham this year. Again, this is in the back of having high oil prices. Now that is the camp of oil exporters. So diversification of funding and developing the debt capital market is also supportive. For the oil importers, the actual higher interest rates means there is a more pressure on the funding requirements, and we've seen Turkey issuing, we've seen Indonesia issuing, we've seen other countries issuing on the oil exporter side. But we've also saw another development where you have the Philippines entering the market and issuing. So as you can see, I've just named 5 key drivers that are supportive of the growth of the industry. But that doesn't mean there is not significant challenges. There are significant challenges, specifically of the development of the market, higher interest rate, emerging market, geopolitical situation. All of these have implication on the market and the sense of issuers. So I think if all in all goes well, I think we're looking at a healthy year coming year, but that is not, you have challenges that are significant. You're talking about uncertainties in the global economy, higher interest rates, higher inflation, growth, geopolitical situation that could actually deter that picture.
Thank you very much for that response, Bashar. So I would categorize you as being cautiously optimistic in terms of the growth for this. A couple of other questions, and if anyone in the audience has questions, please do let me know. But
sure.
Please.
All right. So thank you for the insightful discussion. First off, I'm Lutfullah Pingar from Prometheus, working in risk management. So one of the questions I had was, this is directed towards Mr. Hisham Buknes. Can the IILM play a bigger role in local currency issuances, perhaps, because of the, you mentioned the limitations you face in placement of your liquidity just to high-grade issuers. So would local currency issuances solve that bottleneck, perhaps? And the second question is, one of the key difficulties we faced when I was working at Al Baraka in Islamic finance was that there was no overnight reference rate akin to SOFR in the Islamic finance world. So would there be something IILM can do to satisfy and solve that problem for us? Thank you.
And Hisham, if I can just add to that, there's also an online question that fits in quite well. So in addition to local currency issuances, what is the outlook for perhaps euro-denominated issuances as well? So if you could add that and respond to both. Thank you.
Thank you for the question. So in terms of local currency issuances, indeed, we want to work closely with our members and non-members to provide technical expertise in terms of having managed the ABCP program for the past 10 years successfully, and provide some guidance and experience how to run that, how to provide that kind of tools in local currency to their issuance, to the local market, basically. Doing it directly would be tapping in the monetary policy of each jurisdiction, so it's a purview of each regulator and central banks. So for us, it's more as technical assistance, I would say. We have been doing that, and we have been in contact with several central banks, members and non-members, not only to provide more of the IILM Sukuk as a HQL instrument they can use to issue short-term Sukuk in local currency, but also to address some of the questions they had in terms of managing such program at their level, basically. In terms of the overnight reference rates, so on our side, we managed to build a full curve from short-term tenors from 2 weeks up to 1 year, but to have a really, I would say, usable money market yield curve. If you look at the USD bills on the conventional side as a comparable, you need to have an active secondary market. So more, again, as I was saying earlier, more supply of such instruments, and also more activity at secondary, and a platform to be able to see it either in Refinitiv or Bloomberg as financial markets. But I remember, I think Reuters coming in the past with potential benchmark reference rates at that time. So maybe I'll leave it to you to address that question. But for the last one, before I pass the floor to you, on the euro issuances, indeed is something that we are exploring. So I was saying earlier, we have been issuing for the past 10 years only in dollars. So our assets are in dollars also. So there is 2 ways to do it. It's either to have an asset in euro and issue against it euro. So you are naturally hedged directly. When we were considering that, euro rates were negative, so it was quite challenging in terms of Sharīʿah compliance. We now are exploring also potentially to have hedging of our liability and assets in terms of cross-currency swap, so we can offer not only in euro but other currencies depending on the demand. And again, we are market driven. So we want to be able to be, our program is scalable, but we want to be flexible enough in terms of addressing the demand for either euro, pound, or Sing dollars or other reserve currencies that can be requested by the market, basically. Thank you.
No, thank you very much. And that would be a fascinating development if you were able to provide that cross-currency hedging, and then you can essentially convert your USD denominated instrument to whichever currency there is demand coming from. So that's very, very interesting. I know there's one question from that side. Please go ahead.
Thank you. I am Dawood Arif Khan from BPKH Hedge Fund, Indonesian Hedge Fund. With the growth as good like now in IILM, we believe that IILM will need the places to channel fund that complies with Sharia, which are principle. That means there are a need to a Sharia financial ecosystem that continues to develop in many Muslim countries. If we only rely on one by one central bank, perhaps the encouragement will still not be strong enough. Our question is, does IILM has a special program to convince and encourage the governments in Muslim countries to continue building an effective and efficient Sharia financial ecosystem? Thank you.
It's an interesting question. Dr. Omar, if you'd like to respond.
Yeah, thank you very much, Doctor, for this question. I think it's very important in terms of our engagement with our members. our member countries are central banks, so it's very important to kind of have this continuous engagement with them. Just yesterday, we had a governing board meeting here in the hotel with our governing board members, mostly governors representing their respective institutions. So we use this channel to reach out to our member countries, even though at the moment the IILM members are about 9 of them. So maybe in future, we're going to expand the membership. But I think it's important to keep this engagement ongoing in terms of reaching out to the market to kind of ensure we develop the global Islamic financial system. Our policy mandate is unique. It's basically focusing on liquidity management. So that's why, again, we do have IFSB, we have AOFI, we have the IFFM. These are international infrastructure institutions. Of course, we have the ISDB, which is the mother body of all the institutions. And basically, everybody has its own unique mandate. In terms of our mandate, we've been trying to fulfill it, as Hisham has explained, and looking forward, we do have a lot of plans, in the pipeline. And inshallah, we'll keep doing what we're doing. And with your support, inshallah, I think we'll be able to offer more to the industry. Thank you.
Thank you very much, Dr. Umar. And I'm mindful of the time that I'm running over, so I will just divert one last question to Brother Sohail. Very, very quickly, if you can respond to this, given the trajectory that we've seen, given the challenges that we've seen and so on, from your perspective, what do you think the Islamic liquidity management space will look like in 5 to 10 years from today? Very, very briefly, please.
Thank you very much, and thank you for asking me to be very brief. So I will be very brief, hopefully. I think from 5 to 10 years from now, we hope that we could bring that harmonization and to the market to make it a tradable market and easier for everyone to access the high quality, raising even the high quality liquidity assets, which is really leaking now, we can say. And this cannot happen individually. It's collaborative, work with everyone, with the regulators, supervisors, the international bodies. There we can bring the need and the challenges can be overcome. Otherwise, if we will talk from now to 10 years from now, we will be facing the same challenges if we don't overcome this together. That's why, if you ask me personally, if the key thing is the harmonization between all parties, without any missing anyone, the market players, regulators, international bodies. We can overcome all of these challenges. Thank you very much.
Thank you very much, Sohail. On that positive note and that call to action, I would like to bring the session to a close. Ladies and gentlemen, please join me in giving a round of applause to the speakers who shared their insights today. Thank you.
Thank you, Mr. Mustafa Adil, and all the speakers for a very informative and engaging session. Distinguished guests, ladies and gentlemen, let us begin the second and final session for today, a closer look at Sukuk liquidity from buy to hold to a more active secondary market trading. We would like to welcome our moderator for this session, Mr. Hisham Buknis, Executive Director and Head of Business Operations at the IILM. Hisham currently oversees the execution of business strategies, regular issuances of our short-term Sukuk, origination and structuring of Islamic assets, and the distribution of our paper globally. Prior to joining the IILM, Hisham spent 8 years in BNP Paribas in the Middle East, specializing in structuring and distribution of fixed income, FX, and interest rate derivatives. Mr. Hisham Buknis, the floor is now yours.
Thank you very much, Mon, and thank you, Mustafa, for the very interesting sessions that already crossed my session. So I have less time to discuss this very interesting topic, but I would like to do a brief introduction of our speakers. To discuss the current landscape of the Sukuk liquidity, the challenges and potential solutions, needed to enhance the secondary market for the Sukuk. So first of all, we have Mr. Ahmed Roshdi Abdel Maksoud from the Islamic Development Bank. He's the head of liquidity at ISDB, responsible for overseeing a substantial portfolio of $18 billion. So you will be able to give us a good perspective, not only as a liquidity manager, but also as an issuer and only AAA regular issuer in the market, or HQL instrument. Mr. Khalid Al-Rukhai is from KFH, Kuwait Financial House. He's the executive manager for capital market at KFH and responsible for managing various Sukuk portfolio. We have Mr. Serhan Yildirim from Al Baraka Turk Participation Bank. Mr. Yildirim currently serves as the assistant general manager at Al Baraka Turk in charge of treasury and international banking. And we have Mr. Ali Jahel from Dukhan Bank, where he serves as the head of trading and investment treasury and investment group at Dukhan Bank. So welcome everyone. I would like to start with a very brief introduction about the topic of this second session. So there have been a deficit of supply and limited secondary market activity, and the issue are more broadly indicative of shortage of high-quality papers, Sharia objections to some trading activities that will involve trading of debts, and limited diversity of participants from investors, issuers, and market makers compared to the highly liquid commercial bond instruments such as the UST bills. And prime consideration to establish and develop an Islamic money market is liquidity. So this introduction actually is not from today. This introduction has been extracted from the second IILM Roundtable held in 2015 in Washington, D.C. So I want to start this session by asking you how is the situation today about the liquidity? Maybe Mr. Khalid, you can share your perspective, how has the Sukuk liquidity evolved across markets during the past few years?
Yes, thank you very much, Brother Hisham. Bismillah ar-Rahman ar-Rahim. I would like to, first of all, congratulate the IILM for the 10-year Sukuk program. It's an achievement that we are all proud of. So we congratulate us as financial institution in the Islamic space for this achievement. And back to your question on the Sukuk liquidity, I mean, it's quite obvious in the past years how the Sukuk market has been evolved in general in regards to issuances and new market players and key players coming to the market. So this is one huge achievement for the market as a whole. But at the same time, we still face the limitation of distribution and diversification as investors. As investors, and we still lack, compared to the conventional side of the diversification side, as I mentioned. We've been seeing more players in the market, a healthy pipeline, but this limitation still comes or still there. But if we compare it from, let's say, 2015 and till year to date, we see an uptrend on issuances in the primary market in general. So it's not only on the primary market side, but even on the secondary market now. These are key markets that complement each other. So although we need a healthy pipeline on the primary market, we still need a healthy secondary market. And in my perspective, to do that is to have more active players in the market, especially on the Islamic side and Islamic institution, to take this initiative and be part of the secondary market to enhance the liquidity in the markets and start pricing and engaging in this market to get a deeper market, which will attract more issuers, because at the end, a healthy secondary market will let other issuers from different jurisdictions, let's say, believe in this Sukuk market and want to participate because of the liquidity in it. So initially, that's where we stand today on the secondary market. Is there still a good road to go? Yes, I believe it is. Do we have the initiatives? Do we have the capabilities of evolving that? As Islamic banks, we've been a long way now, and we can, I believe, with these types of forums and capability buildings, etc., we can achieve a lot more. Thanks.
Thank you, Mr. Khalid, for your perspective. And indeed, more players are needed for a healthy market to provide more liquidity. We have seen more and more investors, indeed, and we wish to see more. And the liquidity plays a very important role to attract new investors. On your side, Mr. Ali, can you add your perspective and your role as a primary dealer and active trader on the Sukuk market?
Yeah. Assalamu alaikum, everybody. Thank you for having us in this session. So, financial institutions have been historically the main market for Sukuk, and they tend to be more held to maturity than the conventional investors. Although we are starting to see some shifts where some of these institutions now increase their holding into their trading portfolio, so which can easily make it available to trade on the secondary market. And as Khaled mentioned, we are seeing more players in the market, asset managers, family offices, high net worth individuals. And this is on top of issuances from non-traditional Islamic players. We have seen Philippines coming in the Sukuk format. We are seeing US corporate coming in the Sukuk format. So this brings more players, more liquidity, more assets, more investors. And post-COVID, we had seen an increase in volatility. We had gone through the Ukraine and Russian war rate hike cycle. So this volatility does create opportunities. And being able to have dynamic portfolio management will help overall secondary liquidity. But for that, we need a healthy pipeline and decent amount of issuances, which came on this year, Q3, so decent and healthy pipeline. And it should continue to do so in the Q1 and Q2 next year.
Thank you, Ali. I'll move to Mr. Serhan, and we have seen, as both panelists mentioning, the need of new investors, new participating. On our side at IILM, as I was saying earlier, we have seen more and more trading activities on secondary market, and you're one of the primary dealers and the only one in the Turkey market. How have you seen the development of the Sukuk secondary market, not only for the IILM, but over Sukuk in Turkey in the last few years?
Yeah, thank you very much. And I would like to, first of all, welcome you all here in Istanbul for this distinguished event. It's our pleasure to welcome you, brothers and sisters. Well, thanks for the question, Hisham. And it's been a challenging year for Turkish financial institutions in 2023. I would like to be in a position where I will say that the liquidity in the secondary market of Sukuks had developed tremendously during the course of this time, but it hasn't been the case, at least for the sovereign issuances. Of course, there were some specific reasons that are peculiar to Turkey because of what we had gone through this year in terms of the regulations that were pushing banks to buy the securities of sovereign issuances. But to be honest, I have checked the numbers before coming to here, and I can see the volumes in the sovereign issuance market. It's only 1% that's going through the Sukuk traded in the secondary market from sovereign perspective. So, of course, there are lots of reasons behind that why we don't do too much trade on the secondary market of sovereign Sukuks. One of them is that actually we don't have a primary dealer mechanism like we have in IILM, thankfully. But in Sukuk, Turkish Sukuk market, it's been discussed a lot by the participation banks, but actually none of them has actually come up with the idea of accepting this responsibility in the secondary market to be a primary dealer because of the responsibilities attached to this the program. So, I mean, the sovereign side has been a kind of a more silent story from secondary market liquidity. Maybe another promising, contrary to that view, another promising side of the market was the privately issued Sukuks. I mean, I can see the volumes that we had that gone through the Borsa Istanbul fixed income market, and the market share in that market was 25% of all the trades in the secondary market. in privately issued securities was traded on the sukuk side. So, of course, there are very sensible reasons behind that, in which lots of participants in the capital market world of Turkey was present in the market, especially investment funds, have grown tremendously for the couple of years that up until now. So on the sovereign side, because of the regulations and some specific reasons, the liquidity and secondary market wasn't there. And people were buying these low-yielding, long-term securities and actually booking them under the HTM portfolio not to mark to market when the interest rates rises to the current levels. So if you put it under the HTM portfolio, you can trade it in the secondary market for sure. But I'm very optimistic on the privately issued sukuk side, which was trading very actively. Also, we are, as Al-Baraka Turk, as a participation bank in Turkey, we are actively issuing sukuks in the market, and it's traded in the market by investment funds and other participation banks as well. So it's very promising from that side as well. And so maybe that could be the first issues that I could mention for the first question. Thank you.
Thank you, Mr. Serhan. So not only the importance of more players, more investors, but also the key roles of primary dealers or market makers to provide liquidity at secondary, and of course more issuances of sovereign HQLA or sukuk in the market. Mr. Roshdi, as a liquidity manager, there were a lack of sukuk issuances earlier in a specific part of the year. How did you manage your liquidity during this period of rate hike environment and low issuances?
بسم الله الرحمن الرحيم والصلاة والسلام على أشرف المرسلين سيدنا محمد النبي الأمي وعلى آله وصحبه أجمعين. Actually, I don't agree with the phrase of decrease of, let's say, volumes during 2022 or 2023, and I totally agree with my dear brother Bashar that the volumes didn't decrease, especially in 2023. And let me share with you some data extracted from Bloomberg. In 2022, total issuance, I'm talking about international issuance and excluded domestic issuance, total issuance in 2022 was almost 39 billion. While in 2023 it was 55 billion. Okay, if we drag down or we have a holistic view on the type of issuers, we can find that supranationals, they have 17.8% from the total market by 16.7 billion. Number two was UAE by 6.3%, 5.9 billion. Turkey with 5.8%, 3.2 billion. KSA came in the fourth rank by 4.68% with 4.4 billion, and the fifth position was for Indonesia by 3.54% with 3.32 billion USD. In 2023, KSA became number one in terms of issuance by 17.5% with 16 billion USD. Then 16.4 billion USD. Then supranationals came number two with 16.02 USD. Then UAE 8.9 billion. Turkey came number four with 3.2 billion, and Indonesia still number five was only 2 billion, 2.13%. If we will segregate by tenors, if we have like a snapshot by a holistic view for tenors, the 1 year or less tenor in 2022 was 16.7% with 15.7 billion USD. The 5-year tenor, second layer, 5-year tenor was 12.34% with 11.6 billion. In 2023, the 1 year bucket decreased from 15.78 billion till to 11.52, only 11.52 billion, while the 5-year tenor, 5-year bucket increased from 11.6 billion to 18.02 billion. Okay, so the primary market issuance didn't decrease in 2023 at all, and we rely this because like from investment as an investment decision, it is not logic to increase the number of the volume of issuance in an increasing interest rate environment. But from our view that like it's something related to the current geopolitical situations the world we're having, and the whole world try to secure as much money as we can. In ISDB, as the rest of other institutions, we have like our strategy. 2022 is connected to 2021 and 2020, in which the whole world was living in a low interest rate environment, especially for such supranationals or developed banks like ISDB. We are dealing in SDR, based on SDR currencies, so we are only dealing with the major currencies like USD, Euro, GBP, JPY. Most of these currencies have had like a very low interest rate environment. The Euro was in negative territory, JPY in negative territory as usual. Even GBP at that time in 2021, the expectation was that the GBP is going to the negative territory, and the USD overnight rate was only 0.5%. Okay. As Mr. Elian said, that trend is my friend. So during this period, ISDB, as the rest of the banks, they applied policies that like they need to borrow long and invest short. So our investments in short-term instruments have been increased significantly, and we managed to reduce the scale of investing in long-term instruments as well. This since let's say first quarter of 2022 have been reversed as like the whole market realized that the interest rate is coming up. So we managed to increase our investments in long-term investments, either via Sukuk or private placements. Alhamdulillah, we did well in 2023. We increased our portfolio by like more than 6 or 7%, between 6 and 7% long-term portfolio. And also we decreased our short-term investments as much as we can in order to capture and in order to lock high interest rate levels as much as we can for the next 5 years. Thank you.
Okay, thank you, Mr. Rushdie, for your views. Now I would like to move on the potential solutions and how can we enhance the secondary market for Sukuk. So maybe Mr. Serhan, on your side, what steps do you believe are necessary to improve the overall Sukuk liquidity in the market globally? Thank you.
Yeah, thanks. A very good but challenging question. And since we were the partners of IILM program since the very beginning, we are trying to address this problem by suggesting some solutions to that. But so far, I mean, one of the things that we could somehow achieve as Al Barakah took so far was to actually communicate the IILM itself from the very basics to the very detailed information to the new counterparties that we are dealing currently under normal banking transactions. In all of our meetings, we had subhead of our topics in the meetings that we are a primary dealer in IILM, which is international program issuing short-term investment grade US dollar denominated Sukuk, which is not very familiar, very, very present in the market. It's directly a competitor of the US Treasuries, to be honest, from the Islamic financial markets perspective. So we're trying to understand, we are trying to understand their very motivation of having this kind of short-term interest-based, if it is conventional bank or Sharīʿah-compliant assets for the short term. And most of the time they place with their own central banks, they place with their correspondent bank network with under Muraba or other types of structure, which are not, to be honest, from my perspective, is globally Sharīʿah-compliant, because most of the time different jurisdictions come up with different specification of documentation, which may not be suitable for international Sharia standards. So we always try to tell them the story of IILM, and so far we could actually achieve to onboard new people to our dealing network in terms of the secondary market liquidity. They try to attend to primary markets, and then sometimes they come to market to see the secondary market turn out to be a real fact of IILM. So we provide quotations to them in the secondary market as well. So if they see that you are mentioning, you are sticking to the plan, that you're always there, the IILM is working in the field, and also they want to receive the coupon payments, the principal payments, they want to, as they see the secondary market activity, it becomes much more easier for them to be increasing their exposure and also bringing new people with them and etc. So I think we should be sticking our plan to maybe at least holding non-deal roadshows to new markets together as all of us. I would really would love to make a visit to the new markets with you, arranged by the primary dealers themselves. So that will make us more strong on the secondary market topic, I believe, for the upcoming period.
Thank you, Mr. Saran. Actually, it's a very good idea in terms of spreading awareness and meeting new markets, and especially the role of the IILM has been playing cross-border liquidity flows from different parts of the world. I want to come back to Mr. Roshdi to rebound on what Mr. Saran shared with us. This important question of new investors. The first thing we will look at before investing in a sukuk is it liquid, is it tradable? And how has this question has been affecting you, the ISDB, as the main issuer of a AAA rated instrument? And how do you see the ISDB could play a role to further enhance the stronger market of sukuk globally? Thank you.
Yeah, thanks for the question. In terms of new investors in 2023, and also it was very unlikely for us, we found new issuers and we got new names that alhamdulillah they managed to have their own sukuk issuance, and it was very surprising for me that like we can see like country like Philippines, they had their issuance. I know that they were working in this issuance since the last 3 years, and alhamdulillah finally they got it. Also there is like some irregular issuance, like we found that like they issued in 2023, like the PIF KSA came in the market as well. Also like Saudi Faransi, Rajhi, and some this is like not all the names, but like this is the names I can recall. They managed to have the issuance in such a tough line. For the liquidity, we can find, from our perspective, that like there is many factors affecting the liquidity. As I mentioned, the first factor is the geopolitical situation right now we are facing, which is really it's out of our hand, and it's not controllable at all. Second thing is legal and Sharia aspects, as not all sukuk issuance is approved by the rest of Islamic banks or market players, as we can say. So also this is an important thing. We need to unify, let's say, or to have like let's say a master agreement or a master sukuk prospectus that is agreeable by all Islamic banks, and we can put it as a model or as a rule that we can apply it. Otherwise, it depends on the liquidity in the market depends on the demand and supply. We can see that like there is a lot of cash really in the market to be invested in the sukuk, but the problem, as I mentioned, with first of all with eligible issuers that can meet our liquidity investment policy and risk management guidelines, because not all issuers can, from risk perspectives, that can be invested, even from Sharia wise and all other legal aspects if they are meeting our requirement. But from credit rating requirements also we can face, because not many of the issuers they are investment grade, and as most of developing banks, the minimum credit rating that we can invest is at least BBB-, which is the minimum credit rating. Thank you.
Thank you, Mr. Rushdie. In terms of earlier on the previous session, Pak Dadang from Bank Indonesia mentioned about innovation, the need for more innovation to enhance liquidity tools. I want to ask you, Mr. Khalid, in terms of innovative liquidity tools, one of the market needs is to develop a global Islamic repo framework that can help enhance the liquidity at secondary market. How do you think we can achieve this objective, and how, if you can please share your experience using Islamic repo structure at KFH?
Yeah, sure. I mean, repo is an important product to create deeper deeper markets or even the secondary market activities, but it has to come in a later stage after you developed a deeper secondary market in general. So that's one part. Another part is identifying the repo market on the Islamic side compared to the conventional. Now, a repo is a product that was there on the conventional side all the time, but if you compare it on the Islamic side, there are some restrictions. I mean, for example, on the repo side, on the conventional side, they use the repo to cover short positions, meaning they borrow the asset, provide liquidity, and they cover short position with these assets. So there is the use of the asset and the cash at the same time. But this is a restriction for the Islamic banking. So I believe the Islamic industry or Islamic banking must have a clear definition of an Islamic repo market with an agreement on the structure itself. Now we know the double wa'ad, we know the collateralized murabaha, and we know the title transfer. And each one, different financial institutions has a restriction on each one. So to reflect it on an active, let's call it a repo market, or initiating repo desks in different banks, we need to identify what are the restrictions on a repo and how Islamic banks look at the repo market. And then, and most importantly, is adding the Islamic institutions as players in this market, because as we see, the Islamic players are only on the other side of pledging or pledging the sukuk and taking the liquidity. Now we need the Islamic banks to be on the other side to have a more developed repo market and getting it. In this case, there will be more players in the repo market from the Islamic side, and we will have, let's call it an Islamic repo market to use this product efficiently and to create liquidity in our Islamic market, let's call it.
Thank you, Mr. Khalid. So if I summarize, we need first a deeper secondary market, more HQLA instruments traded at secondary to reach an active Islamic repo, and again, standardization in terms of what can be used globally, so we have more players and we can develop this market. So if we stay on the innovation side, how do you think, I want to ask Mr. Ali, and how do you think digitalization can help deepening the overall liquidity? And is there any kind of electronic platform system that could be used to address the market needs for better secondary market?
Thank you, Hisham. I think definitely setting up a trading platform with the help of setting up our IILM with the help of the primary dealers, where we can trade, negotiate electronically at a specific price, will increase a lot the liquidity and the secondary market. It can be initially open to primary dealers and widen out to more investors along the way. And maybe down the road, IILM could be playing a role of I would say liquidity provider or maybe backstop buyers in case you have an excess supply. But I think the setting up of the trading platform will need to go alongside an increase in issuances by IILM, meaning more supply, you will have more floating, and therefore more needs to trade in the secondary market. As of now, most of the monthly issuances are averaging around $1 billion. So if you look at the HQLA needs for banks, or lack of them, meaning that a 25 or 50 million ticket on an issuance of 250 million or 300 million would be quite a challenge to find a secondary. So more size alongside a trading platform where you can trade electronic at the mid price or agreeable trade between two counterparties. Can be on a name give up or non-name give up, but I think this tool will definitely improve the secondary market liquidity.
Thank you, Mr. Ali. I want to ask you all of the speakers just a global question to conclude maybe the session, so we have enough time to take questions from the audience or from online participants. How do you see the liquidity in the next few years, and especially next year when we expect global rate cuts and raising global uncertainties? Maybe I will start with you, Mr. Serhan.
Thanks for having the pleasure of receiving the question in the first round. Well, I mean, one of the key considerations I would be raising here is that, I mean, the biggest issuer in the market and biggest player in the game is back, which is the United States. I mean, I can see that the borrowing plan for the next year is, in each part of the curve, is going to be more than 30% up than the previous years. So they will be back in the market to address their higher deficit. So the biggest quality creditworthiness of the market is going to be in the market with higher issuances, so that there are more supplies from that side. So most of the US dollar liquidity would be probably tried to be drained by this issuer to the market. Of course, it's not maybe a direct competitor to Islamic financial space, but it just shows you how the liquidity should be going forward from the market. But I'm also very aware of the key fact that the main buyers of US treasuries are the local domestic buyers. So we would be trying to find a way to attract new liquidity from different jurisdictions, mostly from maybe the Asia or GCC names as a Turkish issuer, to be honest. So that would be my key consideration of supply and liquidity and where it is directed to. And another key concept is that I believe personally that at least for the first short term, we believe that the rates will be higher for longer, at least, as I said, throughout 2024. And we should somehow adapt to it as a Turkish and non-investment grade issuer in the market to somehow increase the diversification of our funding tools by using some collateral structure. And actually maybe that's also why we are trying to come up with a better innovative structure using IILM as collaterals to raise some financing in the DCM market. I find it very useful, and also I find it the next step for the IILM, because as long as you have it in your balance sheet and trade it only for the trading purposes, you don't actually reach out to the new goals, which is secure some funding on the back of these IILM sukuks. As a non-investment grade issuer, as I said, a fundraiser, I will definitely look into that for the upcoming years to address the challenges that we are up to face next year. Thank you.
Thank you, Mr. Serhan. Maybe Mr. Khalid from KFH perspective.
I think we're going to enter next year with a more active primary pipeline, even compared to the past years, and the indication on that was November, when the uncertainty in the market, let's say, faded down a bit, and there was some clarity on rate. Let's say the markets expected the rate cut cycle to come next year. There was clear windows in November that came with a lot of issuances on the primary side. And I think if this scenario continues by next year, starting January, we'll have a very active pipeline coming from primary issuers and moving along the whole year. And this will reflect to a more active secondary market activities, because many investors or market players tend to switch positions if there is an extensive primary issuance pipeline where they offload and to participate in others, regardless if it was limits or positions or certain other restrictions, that some will offload in the market will create some liquidity in this side. And in a longer term view, let's say in this regards, with this increase in the primary markets or primary issuances, this will reflect positively on the secondary market, where even Islamic institutions will have the freedom of offloading even or being more participant in the secondary market, because they have the choice to do that, and they have the issuances in the future to move through different issuances and other choices, not like in the past years. And although there was a lot of improvements, but still the market is lacking because of the limited alternatives in the sukuk market. We saw new players, as mentioned from the gentleman, Regarding Philippines, we saw early a new participant from abroad, and I believe this will continue to come from the primary market. One thing is important is the pricing of the sukuk. All the sukuk curve is below the conventional side on any issuances, which attracts a lot of issuers to come to the market and let's say take advantage of this pricing. So it's going to be, inshallah, a positive view moving forward on the sukuk market. Thank you.
Thank you, Mr. Khalid. So now we don't have premiums for new issuers in sukuk, so there is abundance liquidity, shortage of sukuk instruments, so it's an opportunity for potential issuers to tap new bucket of investors at a cheaper pricing within the curve, so it's very interesting. So, Mr. Ali, on your side, do you think that even though you have more issuances in the market at primary, but market expect rates to be cut in near a few years or next year, early next year, don't you think that market will just hold till maturity and wants to have a high paying yield at the moment rather than selling it earlier at secondary?
Yes, definitely. I mean, I agree with Khalid in terms of issuances. January should be a busy month because issuers want to front run and issue as early as possible. For the simple reason that there are still a lot of economical uncertainties, and the recent rate hikes and rate hike environment, to what sort of economic outlook it will lead. Are we going to see a recession? If so, will it be a soft landing, hard landing? And how the oil price will be affected as far as the GCC bank are concerned, it will affect our overall liquidity. But if we head into a recession, means that we should see probably a rate cut by Q3 or Q4. Therefore, I agree with you. Some of the investors will probably try to hold to maturity some of their higher yielding assets, as the brother mentioned from IDB. You want to look in. We have not seen that sort of sukuk profit rates probably since a while. Even on the IILM, I remember trading IILM in the zero handle. Now, alhamdulillah, we are at the mid 5%. So it does make a lot of sense from an investment point of view to hold these assets.
To hold, so less secondary market, right?
I mean, the held to maturity will be from a certain type of investors, and activity will and secondary activity will come from another set of investors. So overall, it will be positive, but different players have different needs, and the market can cater for all these needs.
Diverse players, the more
exactly
secondary. Mr. Roshdi, on your side, how do you see the near future at ISDB?
Yeah, I totally agree with my brothers, Brother Sarhan, Khalid, and Ali. But I just want to add there is like one major challenge, as I mentioned before, which is the geopolitical issue. The problem that like there is a cycle that it need to be completed in order to have like a healthy environment. So this cycle starts with the projects itself. I know, as far as I know, like there are some names, some banks, they want to issue in 2023, but they didn't find sufficient assets. As you know, in order to issue sukuk, you need to have like an underlying asset. So they didn't find the sufficient assets. So as the tension increased from geopolitical side, this would reduce the number of assets or the number of projects that it should it aimed to be agreed in 2024 or the next 3 years. This will reduce as well the volumes of or the available assets in order for the issuers in order to increase in order to issue new issuance. Add above this the uncertainty about these geopolitical issues, especially in the Far East part, like the tension covering the Far East part between China, Taiwan, all this. We are talking about 1/3 of the world economy. If inshallah, we hope that like everything will settle down, but in the view that if things escalated more than this, we think that it will really severely affect the volume of the issuance in the coming 3 years. Thank you.
Thank you very much. And as a brief summary, so we need more market players, more issuers more tangible assets to be able to issue more and have a more active secondary market. The use of innovation tools also to help centralize the flows cross-border of potential players, more awareness and roadshows to link investors and market makers, such as primary dealers. Maybe we'll take some questions from the audience, if any. Yes, please.
This work? All right. Thank you for an insightful discussion once again. So my question builds on top of what Sarhan Bey said about IILM securities being a direct competitor of US government securities, in that they're one of the few Islamic HQLA assets in the market. So as we all know, one of the key ways to increase secondary market liquidity is to have captive buyers in a market, because their presence entices speculators, which are liquidity providers. So one of the key captive buyers potential out there is reserve currency managers. Currently, at least a significant chunk of the Islamic country FX reserve assets are in interest-bearing assets, like the US government securities and US agency securities. So are you having any conversations with reserve managers about concurrently increasing your supply of securities and they're increasing their purchases of your securities, so that Islamic countries have a direct alternative to US government securities that have good secondary market liquidity and not interest-bearing? Thank you.
So is a question for one of the panelists? Or the
I mean, primarily to Mr. Zaki and you, because you issue the high-quality liquid assets.
Sure. Further.
Can you repeat the question again, please?
Sure. So are you having conversations with central bank currency managers, reserve managers, about them purchasing your securities and you increasing the supply of your securities so that they do not buy US government securities and they buy yours?
Of course, yeah. It's an ongoing item along the last, let's say, 5 or 6 years. We are in contact with central banks in order to invest in our sukuk. But actually, also we are trying to have a wide base of investors rather than the central banks, because central banks also there is like a negative effect in order to have only central banks in your pool. This affecting your secondary market activities, because most of the central banks will buy and hold. And you need to have like a healthy secondary market environment in order to help you to reprice the new issuance that you are aiming to do. So besides the central banks, we are in contact with different market players in order to increase and to hide our investment pools, and it is one of our main KPI for the last like 5 or 6 years.
So just a small follow-up. Do you have a target as to what percentage of your issuance should go to reserve currency managers?
This one is not controllable 100%, but like we have a target that like at least we have between 5 and 10 new investors rather than central banks per each issuance. But in terms of liquidity, it depends on the size of the investor itself. Maybe like the size of the institution itself, is because they have limits in each issuance as well. So yes, we have a target, but this target is seated on the number of new investors coming to you. Thank you.
Yes, maybe I will add to Brother Rushdie on the IILM side. So for us, we want to ensure the IILM sukuk fall on the balance sheet of Islamic banks, so they can use it as a liquidity management instrument. But of course, as Brother from ISDB was sharing, and especially for us, when we issue through competitive bidding methodology, we don't do book building, so it's based on pricing discovery and low yield allocated first. Of course, as of, for example, as of this year, 2023, we still have a majority of banks buying the paper, and 80% are Islamic banks, so it fills our mandate. But we have seen more and more public sector as sovereign wealth fund or central banks buying the IILM sukuk. Now it's close to 13% of our investor shares. And especially since we got the second rating last year, because such public sector needs at least 2 ratings. And as Brother Shri was saying, of course, central banks will, or regulators or reserve managers will hold it till maturity, which defeat the purpose of enhancing the liquidity for the sukuk market. But for us, we see it positively because the more players, as we were saying earlier, the more players, the better. And it's our role to increase our supply. So there is more HQLA instruments that can be purchased by all of the market, all different type of investors, and not only banks, but also reserve managers. We have more and more asset managers and high net worth private banks also participating. So we are not there yet in terms of retail investors, but in terms of sophisticated investors, we want to have a broadened investor base. Majority are Islamic, but we have increasing share of commercial investors using it for liquidity tools. So if we want to be able to compete with the UST bills, not in size, because size is huge and massive, but at least we need to be able to attract new investors that will be a mix of and diversified base of investors to hold till maturity, but also to participate and sell at secondary market when they need cash. And actually what we have noticed when we increase our supply to the market, because when we started issuing in the previous years, we're just issuing 3 times, 4 times a year, right? So that's why you had more hold to maturity behavior. When we started issuing and offering different tenors every month, market got more confidence that the IILM will be there, so they're more confident to offload to raise cash when they need before maturity. So even the 1 month that we introduced in 2019 have been actively traded. Of course, the 12-month tenor is the one that is the most traded because it's a longer tenor. So 75% of the 12-month we have issued in 2022, and this year have been traded at secondary. So thank you. Is there any other question from the audience?
Thank you. Assalamu alaikum to all. This is Fatima Çınar from Participation Bank Association of Turkey. As this session's discussion is mainly concentrating on effectiveness of secondary market, and we have a capacity under IILM with the member countries' issuances. Yes, IILM sukuk issuance is very critical. Effectiveness of the sukuk transactions important. But what about cooperation of IILM member countries with each other? What are the constraints at this part? I'm sure in terms of networking and connection, very well done, and also through these programs. But limit allocation side, credibility sides, the credibility of the countries and institutions itself. Does IILM would like to have such a projections to also facilitate sovereign sukuk and private sukuk of member countries' issuances with such a guarantee or any other structure? Because this is an untapped potential for IILM members, and I believe that this will also increase capacity and members of IILM in OIC member countries. Thank you.
Dr. Omar, maybe, thank you, Fatma, for the question. Yeah. Maybe Dr. Omar, you want to
Sure, thank you. Thank you very much, Sister Fatima. I think we had a similar question earlier from our representative from Indonesia regarding collaboration amongst member countries, and I think this is really key. In terms of focusing on the kind of sukuk we have, the sovereign sukuk and others, and how do we kind of interact with our member countries, I think this is really important. We are actually engaging with them. We do provide informal technical advisory to our member countries and even non-member countries when it comes to developing their sukuk framework. This is something we do, looking at our experience for over 10 years being in the market and issuing. And I think we need more of this collaboration, and I think today's session is part of what we're doing. And further to this session, this afternoon we'll be actually having another session, which is going to be a closed-door session with our primary dealers and our member countries to see what are their needs, what are the pain points, and how do we kind of scale up things going forward. So this is a very good suggestion, and we're working on this, and inshallah, we'll be able to kind of tell the markets whatever we've concluded on, inshallah. Thank you.
Thank you, Dr. Omar. Is there any other questions in the audience? Oh, please. Do we have a mic, please?
Much, all of you. I'd like to thank IILM. My name is Fawad. I'm from Abu Dhabi Islamic Bank. We are one of the primary dealers from the very first day with IILM. And we have seen IILM come a very long way with such major issuances throughout the year, with now the entire short-term curve being there. So a couple of comments from this discussion, and very important points is that to increase the liquidity or secondary market trading, it is important that it is well distributed, whether it is the IILM sukuk or other Islamic sukuks. Concentration of sukuk in one place does, obviously, it does provide us with safety net that they are not as volatile because of because of the illiquid kind of instruments sometimes in some issuances. But in terms of IILM, we would like to see more secondary market trading, and the well distributed it is, the more liquid it will be. The more players are there in the market, the more acceptability for IILM comes in with the ratings and everything else, and with more better RWA treatment for those in some jurisdiction. The second point that was raised by both Ali and Khalid is that the Islamic repo, the securities need to be repoable in the secondary market. And commodity muraba has a different challenge for some jurisdictions. The dual wall structure that is there currently being used in Saudi Arabia is not approved throughout in the Islamic jurisdictions. So I think this is one key role that IILM can play in terms of facilitating, because the conventional banks do have a GMRA, right? It is very easy for them to just repo the securities out. We are a very new industry in terms of the conventional markets. We need to come together to ensure that we have a cross-border repoability of securities, Islamic securities, which will only come through, IILM was a major milestone with cross-border mobility of liquidity. Similarly, mobility and then repoing that mobility throughout the jurisdiction will be a key steps, and we should all think, how we are going to achieve that. Thank you.
Yeah, thank you very much. I think that was a very good suggestion regarding repo, and I think we've worked on this framework. Previously, we had a roundtable relating to repo in 2021, and we looked at the different aspects, the Sharia, legal, and the commercial element of it. And inshallah, once we are ready, we will inform the market. Yeah, there's a lot of discussions behind the scenes going on regarding this, and I'm sure we're going to discuss this again in the afternoon at the closed door session. That's one. And on the first question relating to the market-making role of the primary dealers or the distribution of the papers itself, and I think that's where PDs like yours, ADIP, comes in. We rely mostly on our primary dealers to distribute our papers. It's part of their secondary market obligations under our engagement with you. So I think we'll appreciate, our primary dealers' efforts in distributing our papers and playing the market-making role continuously. And thank you for the comment. Okay.
Thank you. You have a question. Okay. Go ahead.
Can I ask? Thank you. Okay, my name is Zakaria. I'm from the IILM staff. I have one question to the participant, not regarding to the IILM, but more to the market player. We've heard during the session that we need more market player. And for the market player themselves, I have a question that's your role as market player when we see that there's less of issuance, or not less, if I refer to Mr. Rashid, the same total issuance in the market, but your role also as market player, or is it fully fulfilled when we see that some of the investors, when they ask or when they want to buy at the secondary one of the sukuk of ISDB or high quality liquid on the market, the spread between the bid and ask, it will not allow them to buy or to sell. So yes, having more market player is okay, but for the market player that currently are the market, are they fulfilling totally the role, and how they can fulfill in a way? Thank you.
Okay, thank you, Zakaria.
Somebody wants to take the question.
Yeah.
Do you want to take it?
Brother Nabil, please.
No,
Further.
briefly. Yeah,
Yes, briefly.
The question is, from a market participant, can you find the paper? Forget about the spread between bid and ask. Can you find IDB 25 or 24 or 26 or 28 maturities? They are not available. These high HQLA issuances, they are both kept in a vault, locked till maturity. As simple as this. And
but I believe if
we
they
need
pay
to
the
see,
price.
and frankly speaking, yes, I'm ICD, I'm part of the IDB group. We need to see the more issuances from the IDB. We need to see more issuances from issuers who qualify for HQLA. Again, back to the point from Brother Khalid from KFH, the depth of the primary market will give you a depth on the secondary and will result, and then the rest will follow. This is the question. I think my colleague Rushdie will agree with me. They get asked, where can we find your paper? The answer is wait for the next one coming in 24. Thank you.
Thank you very much, Zakaria and Brother Nabil, for the response. And yes, it's an introduction for our closed-door consultative forum on the afternoon. I think we have a last question from Dr. from BPKH, please.
Thank you. But I'm not make a question, just sharing. Mr. Omar, I'm just not work in BPKH. I'm in Indonesian bank too, in central bank as in KAKPI committee. This a policy for accounting, financial accounting in central bank. Of course, there is a Sharia issue about merubah sukuk that is cannot be traded in secondary market, and in Indonesian ulama council they prohibited this prohibited to be traded in secondary market because the underlying is debt. And the secondly, repo, about repo, and we are in Indonesia have opinion, Sharia opinion, to use al-muqaradah bidomani ra'sil mal, or mudorobah with guarantee for the principal, because we cannot guarantee the profit sharing, but we can guarantee by the will from the issuer himself or itself to guarantee the. Maybe my friend, where's Mrs. Mika? Maybe she can explain better than me, but this is issued the National Sharīʿah Institution Board in Indonesia issued fatwa number 109. That's repo can use al-muqaradah bidomani ra'sil mal. Maybe we can discuss to the Sharia National Board in Indonesia how to organization about the fatwa, how to make it applied, implemented.
Absolutely.
I think it is opportunity for us to use the fatwa. Thank you.
Absolutely, yeah. Thank you so much, Dr. Dawood. And I think this is quite important in kind of engaging with the respective jurisdictions including Indonesia, to look at the fatwa you mentioned, 109, as well as look at what we have in Malaysia as well, and the Saudi Arabia model. I think we can look at all these with the IFFM paper as well on the Islamic repo. I think we'll consider all these while developing our framework going forward.
I think we need, I call this, fatwa harmonization, international fatwa harmonization.
Yeah, that's one thing we try to do at the IILM. You know, we do have an international Sharia committee. You know, the members are from different jurisdictions, so we try to kind of adopt structures that are widely acceptable in industry. And I think this is why we always organize a Sharia Roundtable. We did one in 2021, and inshallah, we're going to do another one soon. So that's where we discuss some of these key issues, and we try to aim at harmonization. Mind my words, I talked about harmonization rather than standardization. Harmonization actually establishes common standards. Then you can have little variations in different jurisdictions. But you cannot just standardize everything. If Allah subhanahu wa ta'ala He will have made even the whole world Muslims, you know, just have one religion. But because of the diversity, basically, so you have to allow some kind of local variations to some extent, but you agree to cite certain common standards. So that's why the term harmonization is generally kind of used rather than standardization. And thank you for that suggestion, and my team, I think, will take it forward, inshallah. Thank you.
Thank you, Dr. Mar. Thank you, Baghdad, for the question. I believe there is no further questions.
Comments?
Or comments?
It's a roundtable, so
yes. So I think I will thank my fellow panelists, and I will pass the floor to Mon to conclude the session. Thank you.
Thank you very much, Hisham, all speakers and also participants for very engaging and fruitful discussion. Distinguished guests, ladies and gentlemen, we have now come to the end of the 2023 Islamic Liquidity Management Roundtable. We thank you all for your valuable participation and contributions to the discussion so far, and we hope it has been rewarding and insightful for all of you as well, as it was for me. I would now like to kindly invite Dr. Omar Hosseini to provide us with his closing remarks. Dr. Omar?
All right, thank you so much, Mon. Assalamu alaikum wa barakatuh. Distinguished guests, I think we've had a long day, and I'm standing between you and your lunch, so I don't hope to read any speech now. But I would like to just thank you very much, the speakers, our honorable guests from different jurisdictions. We really appreciate you. Thank you for coming. It's a learning curve for everybody, and we'll actually aim at organizing this kind of events more and more. And as we discussed earlier, we'll be having a capacity building event tomorrow for the Turkish market. We just completed that of Qatar, and we were in Indonesia, I think, last month. So we'll actually keep doing this, inshallah, to reach out to the market, work with our primary dealers and our investors. So I'd like to once again thank you all for coming, our partners, Al Barakah, for supporting this event, and we hope to see you again very soon. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Thank you very much, Dr. Omar. Dear everyone, lunch will be served at a Sabrosa restaurant around the corner from here. Can I please implore IILM members and primary dealers to be back here at 2:30 p.m. for the closed door session. Teşekkürler. Thank you.
each had a role to play. Temptation and seduction. Like a movie without a script, we improvised because we were so young. And the nights lasted that much longer.